This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, all back together again. Paul, 14 days from the election.
I know. 14 days from the election.
Countdown.
I don't know who the undecideds are at this point, Tom. I mean, if you haven't formed an opinion by this time, I don't know what you can do. I guess there's more TV ads. Maybe that'll work. I don't know.
Well, we're seeing it in Pennsylvania.
Yes.
And others with lots of good coverage in that. Wendy Schiller scheduled today. David Gurr on deck. As we're trying to get Gurr's, people won't talk to me.
No.
It's like, it's
in
impossible.
high demand at this point.
I've been away for a few days. We're going to see if I can do this. It's 50-50 whether we'll go. Oh, you're laughing at me, Lisa. Okay,
Saw the photos of Tom cruising around Rome on the Vespa.
Yeah,
it was good.
Perfect.
Very nice.
I
That's
did
the
wear
way
a
to do
helmet.
it.
Everybody went
they went
mental
bonkers.
that I didn't have a helmet. And they're very strict there. They drive nuts.
Yeah.
Driving.
Yeah.
Everybody drives in second gear.
Yep.
Even like a Uber van.
Yeah.
And it's everybody's like a mini F1 racer. They all think it's monsters.
And they all park on the sidewalks and the curb. I don't know what's going on.
Yeah, it's crazy.
But they know what they're doing.
Equities, bonds, currencies, commodities. That's what we see. It's a changed screen over the last week. You know it. And first thing I did is I looked at the Sweeney yield, 2-year yield, Paul, 4.05%. What's the mortgage doing? It's back to 7.
Yeah, I mean, no refinancing in sight here. I mean, I thought, see the 10-year at 4.20, Tom. I mean, I thought the Fed was cutting rates here.
Important economic data here, really priced in here. Of course, we get to the end of the month. The jobs report will be key, that election coverage. We had a meeting this morning. They demanded I come in at 3 a.m.
Okay.
And I said, well, that's 9 a.m. Rome time. So I guess it's
You're fine.
First 3 a.m. I'm out to do election coverage.
Yeah, I know.
We will be with you all week of election coverage, and we are assuming you will get special treatment from Bloomberg Surveillance over the weekend after the election. That's our date calendar right now. Futures negative 28. Let's do this. Let's go to Lisa in the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
Thank you. And you are clean shaven, too. I know a lot of people were wondering if he was
exactly.
going to shave
Thanks for
coming
calling that
back.
out.
The marriage survived.
Thank you. That's always good news. All right, let's get to the markets right now. Futures, right now we're lower after another busy day of earnings. Nearly 30 companies reporting. I want to get to some of them right off the bat. We'll get to General Motors. They're up about 2%, posted better than expected results. Latest quarter also raised the low end of its full-year profit forecast. Strong U.S. demand for SUVs, trucks that really offset those losses over in China. And General Electric reported a jump in third quarter profit, raised full-year guidance. GE Aerospace continued to capitalize on that strong order book. But shares right now lower, down about 3%. And 3M, the maker, posted notes. Scotch Tape shares up 3%, raised full-year profit target for a second time under its new CEO. The results come after the company said it was ending its remote-friendly policy, asking bosses to come back 3 days a week. We have more from Kimberly Clark, Verizon. Stay tuned for that. We'll get to that in the next hit. I have to get to futures. NASDAQ futures down 0.5%, 110 points. Dow futures down 0.4%. Same for S&P futures. We have the 2-year yield 4.05%, down 1 basis point. The yield on the 10-year 4.21%, and that's up about 1 basis point. To commodities, oil right now. Brent crude up about 0.8%, $74 a barrel. WTI crude $71 a barrel. And we have gold higher at $2,737 an ounce. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul, I really want to sit on 3M. I know you had Gina Martin Adams on. Was it yesterday?
Yes.
Yeah, and I think this is just classic Gina Martin Adams. Lisa, what was the headline you had from them on work from home, work from office?
Oh, 3
3M?
days a week. The managers have to come back.
Just
I mean, now they're working
Just
2 days.
three, I know.
No, wait, they're working 2 days a week now?
They were working less than that, yeah, but now they want them all to come back. They have this
totally
whole
don't get it.
remote-friendly policy.
And Nick Booth over at Stanford, Paul, is doing great research in this, showing the efficacy, particularly for women with kids, of work from home. And I don't know how this ends up. It's not I don't have an opinion, but managers at any big industrial company, 2 days a week in the office?
I don't know, but I figure we're all We're all figuring
Yeah.
it out as we go here, 5 years after the pandemic.
My key headline here, where we're going to see cost rationalizations. 3M now sees adjusted organic sales, Paul, 1%.
Wow.
How do you do that? Adjusted organic sales.
I don't know. The stocks are 47% year to date. So
Off the mat.
Yeah, exactly. So,
Yeah.
Minnesota mining and manufacturing.
Very
gets out
good.
there.
I'm
Yeah.
only doing Minnesota mining and manufacturing because Margie Patel's the only guest that
Exactly.
remembers that. Margie Patel with us right now with Allspring Global Investments. Margie, if corporations do what I say they're going to do, which is adapt and adjust, are they going to adapt and adjust to a strong use of cash next year?
No, I think they're still going to have a pretty good position because I think that even if you have the economy growing 1.5% to 2.5%, rather modest, I think you'll see revenues grow by, say, 4% and earnings grow by 8 to 10%.
Goldman Sachs did a beautiful grid they put out. I went back to David Costin on Twitter and I said, make it back to the pandemic. Do you see buybacks now as entrenched as they were pre-pandemic, or is there a new insistence on buybacks?
No, I think they're going to continue to balance what they think is the best use of shareholders' cash. I think you'll still see buybacks, but I think you'll also see companies simply increase their dividend or hoard the cash just in case the economy slows down for them.
Mark, I'm looking at the INGO function on the Bloomberg terminal, the Bloomberg Index browser, and it showed me the best performance in fixed income has been U.S. corporate high yield at about 7.7% here. Talk to us about the U.S. high yield market. Has that been priced out, or is there still opportunity there in high yield?
Well, it's interesting because high yield has been the best performing sector in the fixed income market in 22, 23, and so far in 24, in spite of expectations for a big correction. And the reason is the economy's been very good. The Fed, even when rates were at 5.5 for short rates, really didn't have tight financial conditions. And companies have used the last decade of zero interest rates to improve their balance sheet so they have cash on the books. They have very little short-term debt that's due. So they're in great shape. So yield spreads are very, very narrow today.
Marcus, so I guess one of the questions that we have here coming into the November meeting is, what is this Fed going to do here? I mean, I think we kind of came out of the last meeting thinking that they were going to cut in November and in December. Now November's kind of up in the air. What do you think this Fed's going to do, given some of the economic data we've seen recently?
Yes, it's amazing how the outlook has gotten so cloudy from feeling confident we get 2 small cuts to now saying maybe they won't cut at all. And I think what they're looking at, who knows, but I think what they may be looking at is looking at the market and getting clues from the market, which is there's a tremendous amount of liquidity available. Say in the fixed income market, there's bidding wars to get loans on the books. There's actually a scarcity of fixed income security.
Yeah.
And although inflation isn't up, you can see maybe demand looks pretty good. So their pathway just really isn't working the way their model would say.
So for our listeners and viewers, Margie, what is the strategic tilt of blended yield and dividend growth and dividend into next year? What is your tilt, your tendency?
The tilt still is looking for stocks that have total rate of return growth and not looking so much at dividend yield, because I don't think you're going to see a big increase, and dividends aren't really that high. And also, when you look at the fixed income market, you're looking really at yields of, say, 6 to 7% for high yield, maybe 4% for BAA investment grade. That's not all that attractive compared to stocks.
Margie, I'm just back from 5 days in Italy, and I come back to the toughest decision of my life, and I said, get Margie on in the 7A block. Margie, we're Red Sox fans. Do we go Yankees or Dodgers?
I'll leave that to you. I would personally favor Dodgers, but you're the expert.
Okay. See how she had her
Nice.
general
Definitely
counsel loved that
pushing off on that.
answer.
Yep.
Margie Patel, thank you so much with Allspring there, carefully phrasing the last question. This will be a source of conversation here. I'm going to make an announcement Thursday.
Okay. Thursday call.
I'm
Thursday
really
call.
on the fence.
All right. Very good.
You know, we'll see. We'll have to see. Futures negative 28, down futures negative 190. The VIX, come on, Paul, with the tension out there, the bond market, the VIX ought to be 21. It's not.
No, 19 and change.
19.33. We'll have to see. With your news in New York City, Michael Black.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump and his Democratic rival, Vice President Kamala Harris, are ramping up their campaigning in the final 2 weeks before Election Day. Trump made 3 stops in North Carolina, including in Asheville, where cleanup efforts continue after Hurricane Helene hit.
On January 20th, you're going to have, I think, a new crew coming in to do it properly and help you in a proper manner.
Meanwhile, Harris in Brookfield, Wisconsin, attacked Trump's Ukraine policy.
Vladimir Putin would be sitting in Kyiv if Donald Trump were president.
Liz Cheney accompanied Harris on a 3-stop swing that also included Pennsylvania and Michigan. Meanwhile, a tiny little error could make your mail-in ballot not count. Ben Hovland, the chairman of the U.S. Election Assistance Commission, says if your signature does not match the signature they have from you on file, it could get rejected.
It is important for people to remember when they're signing their ballot envelope to take that seriously, try to replicate when they got registered. Most Americans get registered at the motor vehicle offices, so it was probably when they got their driver's license.
Ben Hovland with the Election Commission also says your mail-in ballot will get rejected if you forget to sign your ballot altogether or don't get it there on time. Secretary of State Antony Blinken is scheduled to meet later today with Israeli Prime Minister Benjamin Netanyahu in Jerusalem. Blinken is on his 11th visit to the Middle East in efforts to engineer a ceasefire between Israel and Iran-backed militants since the attack on Israel more than a year ago. Hurricane Oscar caused at least 6 deaths in Cuba after hitting Sunday night. The island is also facing a long power outage, and it is raising tempers. It was the 4th night of the blackout. There were small protests and a stern government warning that any unrest will be punished. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
We're going here first because, folks, I'm going to make an announcement. I got therapy going and, and I'm talking to Dr. Michael Barr as well. Okay, we lost Babe Ruth and then we lost Mookie Betts to the Dodgers. Fox Sports has that as the 2 worst trades in history, both belonging to the Red Sox. But first of all, this is going to be like a dream World Series.
If we were talking about this yesterday, if the TV execs can't make this work, I don't want to hear anything about streaming this, and we got to do that.
It doesn't start at 9 p.m., so we can watch a little bit of it.
Every game.
Every game.
Every game, 8:08.
Yep. Somebody somewhere said that's time
could
to
they
start.
just do one kids day, do a whole?
No, they've written that off long
kids
ago.
like 7 p.m., 6:30 p.m.
Yep.
Well, that used to be when Vita Blue was playing. Remember that when it was really on the afternoon.
Yeah. So what's the betting on this? Is it like Yankees in 6, or Dodgers in 6? Is there like formal betting yet?
I'm sure there is.
Dodgers are slight favorite. Thank you.
Dodgers are slight favorite. How did that happen?
I don't know.
All right. Well,
Haley Koufax emailed me. Her tickets are 7 rows up behind third base.
Nice.
It's Chavez Ravine.
Yep.
I mean, she goes. She takes the fan.
Lucas Shaw and
she's got 6 guys.
All our folks out in Bloomberg News out
Lucas
in LA,
is
they're huge
diehard.
firms.
Yeah,
huge fans. Huge fans.
Do I see a remote happening here?
Yeah.
Forget the election. Let's go to LA. We'll have to see. This is going to be great, folks. For those of you worldwide, across this nation, Dodgers, Yankees, Dodgers is absolutely magical. First time in years the Yankees have made it this far. Yeah, over 20 years. Wow. Ari's a font of wisdom.
I know.
From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit bny.com. All right, into the markets we go. Futures right now lower with the S&P 500 set for its first back-to-back drop in 6 weeks. Now, Citi warned exposure to the S&P 500 has reached levels that were historically followed by a 10% slump. So let's see how things are shaping up. We have S&P futures down 0.4%, 27 points. Dow futures down 0.4%, 193 points. NASDAQ futures down about 0.5%, 111 points. The 2-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.21%. And that is up about 1 basis point. To currencies, with the dollar weaker, Japanese yen weaker at 150.90 against the dollar. The euro stronger, British pound weaker. We have Bitcoin down about 0.6% at around 67,000. More earnings coming in fast and furious this morning. Shares of Scott toilet paper maker, Kleenex maker Kimberly-Clark down 2%. Cut its forecast after a sales miss. Here's the thing: stores that sell the company's products, they're lowering their stocking levels. High interest rates, cost for shipping, that's sort of part of the reason. Then you have Verizon. Verizon added more mobile phone subscribers in the third quarter than expected. It also hit an early target for broadband customers. It continues to bundle that streaming service, home internet with wireless together. And finally, Philip Morris boosted its adjusted earnings per share forecast for the full year. Its shares are up about 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us really timely here on a global basis, but also a focus on America and equity research. Mike Wilson of Morgan Stanley coming up later. Maria Vetmanen joins us now with State Street, head of their equity research, with Parchment from LSE in Burbank, London. Maria, thank you so much for joining. Define State Street's view of American exceptionalism.
Yes, good morning. That's actually a really good way of putting things. So American exceptionalists, you have economies are doing okay, earnings are coming absolutely fine, and then you have very aggressive central bank that wants to cut interest rates, kind of getting ahead of the recession, and then compare that to, for example, Europe, where we arguably already in recession, or parts of the Europe in recession, and central bank being very hesitant. So I think that's kind of explain American exceptionalism, and that's perfectly reflected in stock prices.
And you see it, Paul, on this. You go to the earnings function, NI space ERN, which is the huge earning dump we get. And I get, Lisa says a stock's down 2-3%, up 2-3%. Everybody in America's adapting in real time versus other geographies.
Absolutely. So I guess one of the questions here is kind of, it looks like the Federal Reserve is certainly in a cutting mood here. Maria, how do you think they're going to proceed going forward, and how does that inform kind of your view of these markets?
Yeah, I'd like to maybe take a little bit a step back. And market is absolutely obsessed with the size of the cut, the timing of the cut. We know the direction of travel is that Fed is very focused on getting interest rates lower and trying to engineer soft landing. So I think that's really what's really important for equity investors. So we're sticking with constructive view on the market overall. In terms of equity selections, you go for like better quality plays and stronger earnings, which are quite plenty.
Where do you see revenue growth? Is it subsiding down? When I look at the Bloomberg screen on a day, Philip Morris, Invesco, Moody's, 3M, they're all out today. Margie, what I'm seeing here is a dampening of revenue growth off dampened nominal GDP. Do I have that right?
Yeah, no, I think you're absolutely right. And actually, not just on revenue, but on like bottom line as well. So you have the situation where kind of overall earnings are fine. There's 3-4% growth this quarter. But if you split it out, you have tech that expected to grow about 20%, and then the rest of the market that is desperately hoping to be flat. So yeah, overall situation is not fantastic. Fortunately, tech sector is large enough to kind of pull the indices higher and kind of overall numbers higher. And that's really the key for us, to focus on large cap, focus on quality, so focus on those areas that can deliver you better earnings and like top line, bottom line as well as top line.
I mean, Paul, Verizon's out, and I'm not even going to give the details, folks. We'll do it later. 10-year track record, Verizon, up 4% a year with dividends. 4% per year for a ginormous wireless kind of T-Mobile thing.
But I was just looking at, Tom, a year to date up 16% with a dividend yield of north of 5%. I don't know, for 6.2%. I don't know. For some people, that's probably okay. Maria, talk to us about the earnings that we've seen so far. The big banks, some of the companies we've seen have done pretty well here, earnings-wise. What are you looking for the remainder of this earnings season? What do you think the market needs to see from corporate earnings?
I mean, the interesting snippet of information I caught onto is that companies that beat analyst estimates, even though the estimates have come down, but companies that beat estimates, they actually, on the reporting day, performing, I think that's the best performance in like 5 years, like all 20 quarters. So market is really rewarding bids. So yes, expectations come down, but I think that's about bids, that's about guidance. So the kind of mood music in market is very, very constructive. And I mean, when we look at our investor behavior indicators from State Street Custody, investors are buying risk. So to me, it's really fascinating. I mean, we have huge risk factors. Right. We have elections coming up. We're having like international wars happening. But investors, equity investors, they're going for risk. And I think that kind of reflects this kind of equity. Okay, even if you bid by a little bit, you're still going to go up.
Is Europe, is London, Paris, Brussels, Frankfurt, I guess, Zurich, are they buying America?
I think people buying America. Unfortunately, people are not buying Europe. So you do see this big contrast. We spend a lot of time worrying about U.S. economy and Fed and is there a recession, but it's nothing compares to the mood music you see in Europe. I think,
what sector
economic situation is more difficult.
Come on, there's got to be a value play in Europe. I mean, Paul and I are like Nestle's and Siemens. That's our incredible vocabulary here. What part of Europe value is there an opportunity in right now?
I mean, it has to be large caps. So those more internationally exposed companies that selling to US are doing a lot better. Definitely companies that selling to China or domestic companies. So US exposure. So I mean, some big global kind of consumer goods and food producers, they score relatively better. But on the other hand, if you can buy some US tech, I mean, why go to European large caps?
Hey, Maria, how about China real quickly here? We've seen the federal government try to step up some of their stimulus for the economy. How do you guys at State Street think of China right here?
I mean, in terms of China, our thinking is that as long as, quote unquote, national team is playing, the policy stimulus are rolling in, investors are out there. And what I worry is that the drumbeat of those announcements is kind of drying out. So we see a bit of less appetite for Chinese stocks in particular. The key fundamental indicators I'm watching is retail sales. So we know the problem in China is lack of consumer confidence. Consumer is not spending, so there are a lot. And unless we see that, all the kind of the efforts are marginal. So we're watching retail side very, very carefully. And so far, we haven't seen any kind of huge improvement.
Great update, Marge. Thank you so much. Marge Vetman with State Street there with, I think, an Anglo-centric tone. What I learned, Paul, I nailed that pronunciation. Leave me alone. What I know, Paul, is you can buy 7 different limoncello candies in duty-free.
Really?
What a racket.
Wow.
It's the gauntlet. You go through
It's Christmas for everybody.
All the vices. You come out of the passport, and there's all the vices.
Yep.
And then you got the luxury gauntlet, which just goes
on and
forever.
On. Yep.
Then you got the food gauntlet.
Sure.
And
just to get out of Rome. That's what you have to do.
Sconza limoncellos, Carlino's limoncellos, Fida limoncellos. The ones I like, the Pearl de Soleil, Amalfi. John Farrow got me out of those.
Okay.
They're great.
Very good.
Limoncello,
don't miss a beat there when you're one in Rome.
Yeah, that's what you do.
Hang with
It's some good stories. It was great to see so many people over there. I was really, this YouTube reach is something. It's like shocking, what we're doing on YouTube. We're building this out. Should we wear makeup?
Sure. I mean,
big debate. After the third martini, that was a hell of a debate. We are on YouTube. Subscribe to Bloomberg Podcasts on YouTube. It's growing each and every day. From New York City, Paul Sweeney and Tom Keene, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling as investors rethink the Fed's path to interest rate cuts. Right now, NASDAQ futures down 0.4%. Same for Dow futures and S&P futures. The two-year yield, 4.05%. That's little change. The yield on the 10-year, 4.19%. And that's little changed as well. Heading over to commodities, we have Brent crude, $74 a barrel, up about 0.7%. WTI crude, $71 a barrel. Heading over to spot gold, that's higher, up about 0.5% at $2,734 an ounce. S&P shares rose to a record, up more than 3% right now in Germany. It reported cloud revenue grew 25% last quarter. It also raised its guidance. Then we have a few companies making news like HSBC breaking tradition, its first female CFO, Pam Kaur. It comes as the bank unveiled its biggest restructuring in a decade. And finally, Walmart. They say they will offer prescription delivery to U.S. homes in as little as 30 minutes, and that could put it in better competition with places like Amazon. That is your Bloomberg Business Flash. Tom and Paul.
30 seconds here, Paul. Lisa, thanks so much. Great earnings. She does the earnings better than we do.
Exactly.
You know, she just kills it with all the. Tomorrow's worse. I think you have a day like a week from now where there's 412.
Tomorrow's a big one.
HSBC, when were they not, Paul, restructuring?
I don't know.
I don't remember when the Hong Kong and Shanghai Banking Corp wasn't in some form of restructuring.
It's more than 150 years old here at the HSBC, and I don't know.
The thrust is two banks.
Yeah, it is. It's what they do in Asia, where they're huge in Asia, but they've got this London heritage as well. Yeah. So it's really just amazing. This institution. It should be one of those big global financial empires like J.P. Morgan.
Yeah.
But it's just not.
And the research impact. Good morning, Stephen Major in Hong Kong, Max Kettner in London, many others at HSBC. Really appreciate the intellectual input we get every day. Sometimes we get it from people that write books. Ellen Wald's book on Saudi, on the royal family, is absolutely definitive. Senior fellow Atlantic Council. She joins us today, I guess on a barrel of Brent, but let me cut to the chase, Ellen. The royal family in Riyadh, in Jeddah, who do they want to win the presidential election?
That is a good question. It's interesting because if you think about it kind of in the short term, they definitely seemed like they had very good relations with Trump. I think that's what it seems like on the surface. But I do think that they have actually have potentially more to gain in the longer term from a Democrat presidency, from a Harris presidency. If you look at what Biden has been trying to do with oil production in the United States, and for all intentions, it seems like Harris is going to pursue a similar strategy. I mean, we have the potential for no more leasing sales, for example, in the Gulf of Mexico, and that could severely curb U.S. oil production, which would definitely impact oil prices and make them go higher, which is good for the Saudis.
Okay, I'm confused. You're telling me that a President Harris would take us away from American oil independence?
Well, I think that I know that she says she supports oil production, and I think that that's a line that everyone does support. But if you look at what the Biden administration has done, especially at the administrative level, they've put a lot of curbs on oil leasing and gas leasing on federal lands. And particularly, there's some interesting stuff going on with the Gulf of Mexico and leasing there, but also with permitting. And there have been a lot of tightening of environmental regulations and permitting, both on land and also on sea and for offshore production. And that really has the potential in, not necessarily the next 2 years, but definitely, farther out, it has the potential to really restrict growth of American oil production, and also, what kind of oil we can see. We're producing 13 million barrels a day right now, but that doesn't mean that that's what we'll be producing next year, in the next 2 years, the next 4 years, or the next 10 years.
Ellen, that's the supply side of the equation. How about on the demand side? When I think about the demand for oil, I think the marginal player here we have to have a good call on is China. What's the feeling about China and its demand for oil?
Oh, absolutely. I mean, I think this is continuing to really rock the market. I think that the two factors that are really influencing the market right now are China demand. Where is this going? Because so far, the indicators are not looking good for Beijing, for China's economic growth, which would indicate lower oil imports going forward. But Beijing has talked about introducing some stimulus measures. The question is, what are these going to be? And without more information, without more concrete information, the oil market is going to continue to be very skittish about Chinese demand, especially in the short term. And so if these indicators continue to be unsatisfactory to the market, we could definitely see a pullback in oil prices.
Does Europe here, we're going to year 2+ of the Ukraine war here, has Europe weaned itself off of Russian oil once and for all, and gas?
Has Europe weaned itself off of Russian oil? I'd say they've definitely made a very significant strides in that direction. The problem is that they've replaced it with Middle Eastern oil and American oil, and those are not necessarily super secure. I think that Middle Eastern countries are more than happy to sell to Europe. It's not problematic for them, but they really do see that the future of oil demand is Asia. And so with Russia kind of selling more to Asia now, less to Europe, and then Middle Eastern countries selling more to Europe, and I would say they're still selling a very good amount to Asia, but I do think that they would certainly like to sell more to China and other Asian countries. So, it's kind of a balance for them.
Our Stephanie Baker is making the rounds now with a huge impact book on Mr. Putin. Ellen Wald, how does Mr. Putin and Russia fold into your oil analysis, the geopolitical analysis that's out there?
Yeah, I think that the West in general, especially the United States, really miscalculated what Putin was going to do in terms of global oil. I think that they really believed that this oil price cap policy was going to curb the revenue that he was going to be getting from the oil industry without sending oil prices sky high and by keeping Russian oil on the market. They really believed this. And I think that Putin and his oil industry has really shown a lot of resilience. He's getting a lot of money from other sources other than just the price of crude oil. They've basically created their own shadow shipping agencies, their own shadow insurance agencies, and all of that is producing revenue for Putin. And so I think that they really kind of underestimated his ability to pivot and to develop these new resources. And I think that that's something that they really shouldn't go forward in doing in the future. The problem is that they seem to be patting themselves on the back for a good job.
Can there be a new policy? I mean, Stephanie's book, Punishing Putin Inside the Global Economic War to Bring Down Russia. Stephanie's, since the last 24 hours, had some very strong comments about let's go. Let's really put the screws to Putin. Can we do that? I mean, do you see an adjustment off this election where we can be more rigorous with Putin on oil incoming?
I think we absolutely could be a lot more rigorous with Putin. I mean, look what we did to Iran during the Obama administration. I mean, those sanctions were tight. Iranian revenue was way down. And then even during the Trump administration, when it wasn't, a UN and a global sanction, but they really toughened up on the sanctions. It's less a matter of, making a statement and issuing something and actually enforcing it, putting the muscle behind it. It absolutely can be done. There are risks associated with it. Oil prices are going to go up. They've got to be prepared to deal with that, whatever that will be. I do think that they could get the cooperation of, I think it would be tough to get the cooperation of OPEC Plus, given that Russia is part of OPEC Plus. But go ahead, try to say, we'll tighten our enforcement, but make sure that you can put more oil in the market. They want to put more oil in the market anyway, so I don't think that will be all that difficult, but absolutely, it's just going to require some commitment and some suffering, essentially. And it just doesn't seem that any of the current policymakers are willing to take that risk.
Ellen, thanks for the brief. Ellen Wald with us here. The book is Saudi. Can't say enough about it. Senior fellow, the Atlantic Council here, and some of the international ramifications. Scheduled later this morning, Francisco Blanch, the Bank of America, on hydrocarbons and commodities. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, a prominent Republican voice has joined the Democratic candidate for president on the campaign trail. Vice President Harris held events in 3 swing states with former Republican Congresswoman Liz Cheney. Cheney spoke in Chester, Pennsylvania.
We have the chance to say, we're going to reject cruelty. We're going to reject the kind of vile vitriol that we've seen from Donald Trump. We're going to reject the misogyny that we've seen from Donald Trump and J.D. Vance.
The Trump campaign calling it Kamala's fake town hall with loser war hawk Liz Cheney. Yesterday, former President Trump campaigned in North Carolina. Trump bashed Harris over how she responds to hecklers. Trump claiming hecklers yelled, "Jesus is Lord," at a recent Harris campaign rally when Trump spoke in Concord.
In our movement, we love Christians, we welcome believers, and we embrace followers of Jesus.
As Trump touts his economic policies on the campaign trail, including eliminating taxes on Social Security benefits, some say it could hurt the system more than helping. A new analysis from the Committee for a Responsible Federal Budget warns Social Security could run out of money within 6 years under Trump's policies. The committee says Harris's economic plan would have minimal impact on Social Security. Secretary of State Antony Blinken has arrived in Israel on his 11th visit to the region since the outbreak of the Israel-Hamas war. He is expected to meet with top officials as the U.S. looks to revive ceasefire efforts after the killing of top Hamas leader Yahya Sinwar. Cuba's capital was largely paralyzed Monday, and the rest of the island went through a fourth night of a massive blackout. Meanwhile, Hurricane Oscar crossing the island's eastern coast Sunday night with winds and heavy rain left 6 people dead. Tropical Storm Oscar is now heading to the Bahamas. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. So I'm having my 4th limoncello at the little coffee place below the Spanish Steps.
Nice.
Expensive, it was like,
all right.
Vivaldi was there or
Yep.
somebody. I don't
Yep.
know. And there's James Gorman.
Yes.
I'm reading the phone, and like everybody else, and James Gorman is taking over Disney. What was your reaction, Paul?
I thought it was a really positive move. James Gorman, the former CEO and chairman of Morgan Stanley, who's on the board of directors of the Walt Disney Company, has now been made, kind of really in charge of the board and in charge of managing the succession issues for Bob Iger. And Bob Iger, I think they announced yesterday that they will have a new CEO named by early 2026. That's a little bit later than I think people had been looking for. But the fact that James Gorman is really taking full responsibility for this suggests that it will get done, and it will get done in a good fashion. And that's important because Disney has fumbled this succession issue for Bob Iger for 10 years. And so they need to get it right this time.
I mean, it's fascinating to me. This is a mathematician and McKinseyite from Australia.
Sure, yeah.
Everyone knows I'm a huge fan. He's been very kind to me over the years. But you don't go to a meeting with James Gorman and do Hollywood talk. You mean, you're a pro at this. This is not Hollywood.
No, I mean, there's 4 internal candidates. Presumably, they'll also look at some external candidates as well. But there's 4 internal candidates, none of which is ideal. So there's going to have to be some selling here and some, I don't know how they're going to kind of frame this out, but at least we've got a professional and an adult leading.
You told
the
me
way.
to buy Netflix when it was 1/3 the value it is
Oh,
now.
boy.
That worked out.
Yeah.
Are you saying Disney's the same thing now with Gorman on board?
I don't know about that because Netflix profitability and streaming is so great. Disney's got a long way to go, but I think people think they'll get it done.
We'll see. James Gorman at Disney. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Investors pull back their expectations for Fed rate cuts after a few central bank officials suggested reducing rates at a slower pace. Right now, NASDAQ futures down about 0.5%. We have Dow futures, S&P futures down about 0.4%. The two-year yield at 4.05%. That's up 1 basis point. The yield on the 10-year, 4.19%, and that is little change. To currencies, we have the dollar weaker, Japanese yen little change, euro stronger, British pound weaker. We have Bitcoin down about 0.6% at around 67,000. A few companies making news. ASML, its CEO said he expects the U.S. to continue pressuring allies to further restrict sales of its chip technology to China. And European car sales posted their first consecutive monthly decline in more than 2 years in September. Stellantis saw registrations fall 26%. That's a big drop. And shares of Hyundai Motor India dropped in their Mumbai debut. The company raised $3.3 billion in its largest ever IPO. Their shares down 7% in India. And finally, Elon Musk and Tesla being sued by Alcon Entertainment, allegedly feeding images of Blade Runner 2049 into an AI image generator to create promo materials for the cybercab. That is a Bloomberg Business Flash. Paul,
no
and
idea
Tom.
what you just said there. I mean,
so the
that's my norm.
The entertainment company said you can't use images from our movie.
Okay.
So what they're saying is
This
that
copyright
he took
thing is
it and
huge,
put it
Tom.
into an AI generator,
Huge,
and then
huge deal.
All right.
big.
We could
It's
waste
big.
our entire interview with Mary Ellen Kloss on this, on copyright, but we're not. So I was having lunch once with Norman Pearlstein,
Heard of him.
who was a huge influence on what I do. Norm, of course, legendary at the Wall Street Journal and his service to Bloomberg, his service to the Los Angeles Times. And we were trying to figure out the one newspaper left standing. And we both agreed it was the Miami Herald.
Oh, yeah.
It is absolutely unique, folks. For those of you that aren't familiar, they are definitive in investigative journalism, and they haven't lost the pixie dust. So you say, okay, great. Who drove that? Who was the energy behind it? Mary Ellen Kloss joins us now to say she's a Bloomberg opinion columnist, barely describes the journalism, the actual journalism involved in her efforts at the Miami Herald. Mary Ellen, I want to go right to immigration. You have lived it with award-winning coverage at the Miami Herald. How do you discern the distinction of immigration of these two candidates?
Well, I think it has a lot to do with how you view America. Because one candidate is willing to accept the fact that we believe in immigration and we assimilate and respect the tradition. And one wants to deem people who are immigrants as inconvenient and people who should be returned to their home country. I think, as we know, both parties are absolutely deserve to be faulted for not making any progress in almost 40 years on immigration reform. And so both both leadership in both parties are extraordinarily at fault. But I think where we are right now is it's just kind of remarkable, the difference in their approach.
With those different approach, who's going to pick up the Latino vote? I mean, it's just as simple as that. I mean, I read the same dynamics. I ignore the polls. Paul looks at the polls. I don't. but Marilyn Kloss, the Hispanic vote, or frankly, the Cuban vote of Miami, I mean, how's that going to play out here 2 weeks from now?
Well, the Cuban vote is going to be a divided one. I've actually talked to somebody just this week who was talking about how it's kind of divided within the households. Many men are voting for Trump. Many women are voting for Harris. But I do think that it's very likely that Miami will continue to do what it does with among many of the Cuban vote, and that is vote Republican. But as you know, there are so many other, representatives, voters from other Latin countries, and their vote is not as monolithic.
Mary Ellen, how was each candidate doing with just immigrants in general in this country? Does anybody have the high ground or have the inside track to some of the recent immigrants in this country that will be voting?
I do think that there is, it depends on where you are. There's also, it's an interesting issue because there are a lot of immigrants who have arrived and they worked to, become U.S. citizens and naturalized, and they kind of see, I think, armed with a lot of misinformation, they are drawing conclusions about the fact that the new arrivals have it easy, or they're being given benefits that others that they were not given.
Marilyn, I don't mean to interrupt, but I think this is so important, and you're so expert at this. Can we delineate and partition immigrants or migrants into separate, solvable categories, or are we going to generalize and lump them into those people over there?
That's right. I think we've reached that point where that is an absolutely terrible exercise in futility, because every immigrant group has its own unique characteristics and approach and how they assimilate into this country. And it's also why that, certain areas, immigrants follow their family and the people they know. And so you can have Somali residents in Minneapolis and Haitian residents in Wisconsin and, others, all over the country people follow. So that is also influences how they are treated and how they are welcomed, and what kinds of assistance there is to make it happen. So
Marilyn,
it's not.
Yeah. Thank you so much. Marilyn Klaus with us from Miami here today on this immigration issue. Paul, she mentioned there, sitting there with a beverage of my choice or more for 5 days in Rome, what was the one thing I thought about? And I went back to my youth. I don't even think you're old enough to remember this. The gender gap in the late 60s and early 70s was this huge, impactful phrase. And I wonder 14 days from now, actually 16, 17 days from now, when we're doing our special coverage, is that really what we're talking about? Is a gender gap election? I don't know.
It just seems, from the experts that we speak to, Tom, so tight. And you try and figure out, who are those undecided votes out there?
Well, they're like 3%. We had a Harvard professor. You had him on. You only had him on because you wanted to talk to him. I wasn't here. But, he nailed it. 3% undecided.
3% undecided. I mean, I don't know, and you're spending a lot of money to reach that 3%, that's for sure.
Did you ever do fries at McDonald's?
Sure.
Like President
2 days. I lasted 2 days at the McDonald's on Olden Avenue in Trenton, New Jersey.
Lisa, did you ever do that act?
I never did. No.
I never did.
I never did the fast food. No. A Subway shop. I did work a Subway shop.
Okay.
Well, that counts.
Yeah. That counts. But not fast food. No fries. No.
Yeah, okay. They looked at me.
I couldn't handle it, so I went and pumped gas for a summer.
I did
much
that.
better.
Yes. Enjoyed it. And then the really good thing is when you have the gas thingy and you don't rewind it for the next car, so that you're telling the guy, that'll be $42, sir. And they're looking at you like, yeah, who are you? Bloomberg Surveillance this morning, and we're brought to you, and we're thrilled to say thank you to IBKR. With the Interactive Brokers Forecast Trader, you can trade your views on the 2024 elections. Just to answer yes or no, visit ibkr.com/forecast and get started today. Interactive Brokers Forecast Trader, the views on the 2024 elections. ibkr.com/forecast. Thank you for that as well. My biggest problem is restaurants in Rome, Paul, that play American music. I'm like, really?
Wow.
Do I need to come to Rome to hear Fleetwood Mac?
I was about to say who?
But I'm sure you found some good restaurants. You had some good
food.
The
food. Yeah. The food is overwhelmingly a level up.
Right.
Everywhere.
Yeah, they know what they're doing there.
We say good morning. It is a Tuesday, a dash to the election, our special coverage. Wendy Schiller later, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Get to it quick here. Mike Wilson coming up for the entire half hour. Looking forward to discerning with him the path forward for the Standard & Poor's 500. Futures negative 27, Dow futures negative 178. Paul, what do you see in earnings?
Yeah, I'm seeing some pretty solid earnings time. I'm still thinking back to the big banks that reported last week. Really solid results across the board. And we're starting to see some of the industrial companies coming through now with, I think, generally pretty solid numbers coming out at General Motors, for example.
The only duo in the world that knows that's Minnesota Mining
and manufacturing
company. Thank you.
Exactly.
For that. Bloomberg Surveillance this morning. We're brought to you by Cohn Resnick, Advisory Assurance Tax. Discover optimization strategies that are helping CFOs to make their finance function more competitive, more resilient. Talk to Cohn Resnick's advisors, and we thank Cohn Resnick for their support. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, futures falling. Another busy day of earnings. We have nearly 30 companies reporting today, so I want to get to some of those right off the bat. We'll start with General Motors. Yeah, they posted better than expected results. Latest quarter raised the low end of its full-year profit forecast. Shares were up 2%. Now they're down nearly 1% right now. 3M, the maker of Post-it notes, Scotch tape, their shares up 5%. Posted better than expected third quarter earnings, adjusted its guidance for the full year. And finally, General Electric reported a jump in third quarter profit, raised its full year guidance. GE Aerospace continued to capitalize on that strong order book, but third quarter adjusted revenue, that fell just shy of estimates. Their shares now lower, down about 4%. Over to NASDAQ futures, down 0.5%, 110 points. We have Dow futures, S&P futures down about 0.4%. We have the two-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.19%, and that is little changed. Over to commodities, Brent crude $74 a barrel, WTI crude $71 a barrel, and we have spot gold at $2,732 an ounce. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now from Morgan Stanley, Mike Wilson, their CIO and Chief U.S. Equity Strategist. Thrilled that he will be with us for this extensive half hour and say good morning to Global Wall Street. Mike Wilson, I'm going to do this in a classy way, and I'm not going to mince words about it. I'm death on fan distribution analysis, so I've talked to Dominic Constant at Credit Suisse and now Mizuho about this. You set up a single point now, and you do a set of what ifs out 3 years, out 5 years, out 10 years, and you come up with a pretty little fan of what ifs. I don't see that in Mike Wilson research. I see guesstimates, the rigor of an Excel spreadsheet. I see single point scattered out charts. Can fan distributions like one of your competitors came up with this week to give us a 3% SPX, can fan distributions work?
Well, I think it depends on how you utilize them. I mean, we do a bull bear base case. We've done that for, the duration of as long as we've had this job. And I think every investor does that. It's called a risk reward. It's what's my upside, what's my downside. And then you basically skew your positioning based on whether you think the downside or upside case is more likely, whether we're talking about a single stock or the S&P 500. So it's no different. I don't think that's a unique approach. I think that's the way most investors think about how to put money to work. And so I think it works, but I mean, it doesn't mean you're going to be right. That's the thing. Do you bet on the bull case or you bet on the bear case at any given time? Depends on how things play out. Is it play out the way you think it plays out?
Paul, you lived this at Credit Suisse, where Dominic was sitting there trying to do extrapolations and future forecasts of interest rates, and he and Ira Jersey had these wispy little charts that they enjoyed being wrong on for over a decade.
Exactly right. And so, Mike, one of the things I think a lot of investors are thinking about here as we think about kind of what's the next leg to this market in any direction is what's going to lead us there is, kind of for most of our listeners and viewers, technology has been the sector that's led this market for, positive or negative. How do you think about technology in the tech sector? And I don't know if that's just AI or broader in terms of a leadership position for this market.
Well, I think that's a little bit of a mistake to say it's just been tech, because the reality is that if you look at the technology sector in an equal weight basis, or just look at the average technology stock, it's actually underperformed the S&P 500. What's really worked in the last, I'd say, 2 years, and really the last 10 years, is high quality, large cap stocks that can operate in the environment that we're been given. And the environment, we've described this very clearly, which is we're in a situation where you're in a fiscal dominance, where the government is just getting bigger and bigger every year. And in doing so, they're essentially crowding out a good chunk of the private economy. And so who benefits in the world that we live in? Large cap companies with scale who can operate in this environment. And that's what's working. So it's not just tech companies. I mean, it's consumer discretionary companies, it's healthcare companies, it's even some energy companies. Okay, like if you have scale and you're operating well, that's what's driving the index higher. That's what has been driving the index higher. That's starting to change a little bit here recently with the Mag 7 underperforming since July. And there's a bit of a broadening out going on. But the broadening out is still happening at the sort of quality level, meaning the market still doesn't really want to go down the quality curve or to companies that have bad balance sheets, et cetera. They're just going into different high quality stocks across the complex.
Mike, we're kind of just starting to get into the teeth of this earnings season. We've had some really good numbers coming out of global Wall Street so far. What do you think the market needs to see out of corporate America over the next couple of weeks in terms of earnings?
Well, you're right. I mean, like as usual, companies have managed the numbers lower going into the quarter. That's not unusual. This quarter was a little bit more negative in terms of the revision. So the bar has been lowered. They're going to jump over the bar. And with the market, like what investors are what they're going to buy are companies that not only beat the lower bar, but then give you some confidence that there's actually some acceleration coming. The thing that's been missing in the last 3 or 4 quarters is we don't have any broad acceleration in order growth, or where's the exogenous positive growth shock going to come that's going to rise, lift all rising boats. And so that's why it's become very idiosyncratic, right? That there's a lot of winners and there's a lot of losers right now, and there's share gains going on, and those are the things that investors are keying off of. Who's operating well in this environment, and I think that's going to continue to be the game that's played.
I look at Mike Wilson like NVIDIA. You got Joseph Moore, covered him. I know you guys aren't on speaking terms, but when you listen to a guy like Joseph Moore on NVIDIA, at your Morgan Stanley, how far out is your terminal value on Mag 7 and on the rocket stock NVIDIA? Do you have to justify its existence by going out not 3 years, but 7, or dare I say a decade?
Actually, Joe and I had dinner last night with some clients, so we are speaking.
Okay, well, tell us about the dinner. No, stop. This is too much. Tell us about the dinner, Mike Wilson. Give us some insight.
It was very enjoyable. It was a very enjoyable dinner with about 20 clients. It's excellent food and great conversation. But Joe, I mean, look, Joe has had the right view. He's been very bullish on the AI winners, and he hasn't been very bullish on the broader semiconductor complex, right? And this is a perfect microcosm of what we were just talking about. Even within semiconductors, okay, you have the big winners, which everybody knows, and then you have a bunch of companies that really just aren't seeing any acceleration in their business because the global economy is kind of and that's what we got. And so in the case of NVIDIA, I mean, Joe said a great call. I mean, he's not looking 7 years out because it's silly to try and predict that, but he is looking out probably several years. We talked about that last night, which is there's a lot of visibility for 25, and then 26 is when the visibility starts to come down. So the stock will start to discount that at some point. Right now, the momentum is quite good.
I mean, Mike Wilson, I got to ask this question. We got to go to break, and we're going to come back with Mr. Wilson if he deems to. Solid. Mike Wilson, when you heard that James Gorman was going to Disney, were you like the football player leaving the field, we're going to Disneyland? I mean, what were your thoughts when your fearless leader who changed your company announced he's going to wander over and help Mr. Iger at Disney?
Well, that was a while ago. He's now the chairman of the board. It doesn't surprise me at all. James is really, really good at this. Managing companies. He did a great job here. I wish him the best, and I think it's exciting for him. So it's the next great chapter for him.
We'll have to see. We're going to come back with Mike Wilson. Lots to talk about here on, the path of your equity investment in 2025. Lifting the market. Futures are negative 23. Mike Wilson's lifted it up to negative 20 on the futures. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 14 days left till the election, the latest poll of registered voters from Reuters and Ipsos shows Kamala Harris leading Donald Trump by 3 percentage points. That's within the survey's margin of error. More from Bloomberg's Mike Shepard in Washington.
The polling is so imperfect these days, and I think that it's really hard to be able to say it's dispositive of an outcome. The polls kind of they fooled us before and fooled us again. We were expecting more of a red wave, so to speak, in 2022. It never materialized, so we can take them with a grain of salt.
Bloomberg's Mike Shepard. Meanwhile, Harris and Trump are highlighting their economic policies in their outreach to Latino voters. In an interview with Telemundo today, Harris intends to show off her plans to double the number of registered apprenticeships and stress how she would remove college degree requirements for certain federal government jobs. Trump plans to hold a roundtable with Latino men in Doral, Florida today. His campaign says that he will make the case that employment, wages, and home ownership increased for Latinos during his time in office. More support for a new trial in a death row case in Texas. Supporters of Robert Robertson insist that his 2003 conviction in the killing of his 2-year-old daughter was based on the now discredited shaken baby syndrome theory. State Representative Lacey Hull testified before state lawmakers. She is backing a new trial for Robertson.
Let the jury make up their mind, but he deserves a real defense and a fair trial.
Robertson has some high-profile support, including psychologist Phil McGraw, better known as Dr. Phil.
If we start executing people in Texas absent due process, absent fair trial, we are going down a really dangerous road.
Also among Dr. Phil supporting Robertson, author John Grisham. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I'm getting up to speed on this. I guess it was the final NFL game in London. They play a number of them.
They do, yep.
And it was, I guess, Jacksonville and the Patriots.
It's kind of almost their home away from home for Jacksonville.
And,
They're all the time.
And is this working? Because I was actually in the city for one game and I got nothing. I mean, there was. Well, is it basically Americans flying over to see a game?
Well,
in
yeah,
London?
it's. I remember because there was a friend of mine held a party when the Jets and the Vikings were playing in London. So this is a big thing.
Yeah, but Doug Cass sent me the numbers while I was in Rome. Thank you, Doug, for that. The Japanese ratings on the last LA Dodgers game were bigger in Japan than they were in America. I mean, I believe I just said that correctly.
I think so.
Like baseball's getting the international thing. Do you guys see American football getting that international thing?
I think it will, because I think the American football is just dominant here in the U.S. It is a juggernaut, and if they set their sights on the UK or on continental Europe or on Latin America, I think they'll have success there.
I didn't have to watch F1 in Rome because everybody there drives like it's F1. It's scary. I mean, you're in the car with your seatbelt on going, whoa.
Well, I predict one day you're going to have a team based out of London.
Really? You
NFL.
think so?
I think that's going to happen.
Could be Jacksonville.
Yeah.
Wow. Fascinating. Well, we'll have to see. I believe the Patriots lost that game. It's like, it's a rebuilding year, I guess is what you could say. Mike Wilson with us. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures lower with the S&P 500 set for its first back-to-back drop in 6 weeks. We'll check in with S&P futures right now, down about 0.3%, 20 points. Dow futures down 0.2%, 123 points. Nasdaq futures down 0.3%, 75 points. The 2-year yield 4.03%. That's little change. The yield on the 10-year 4.18%, and that's down 1 basis point. To currencies, we have the dollar weaker, Japanese yen stronger at 150.80 against the dollar. We have the euro stronger, British pound weaker, Bitcoin right now down about 0.5% at around 67,000. More earnings coming in. We have shares of Scott toilet paper makers. Kimberly-Clark down 3%, cut its forecast after a sales miss. Now, they say stores that sell its products, well, they're lowering their stocking levels. And Verizon reported third quarter revenue missed expectations. That was due to a slow phone upgrade cycle, down 3% right now, those shares. And Norfolk Southern delivered strong earnings last quarter, added boost from insurance payments and also the sale of rail lines in Virginia and North Carolina. Their shares down about 0.1%. After the bell, we get to Texas Instruments. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Mike Wilson, Morgan Stanley with us. Mike, I had the clearest memories of the rite of passage of reading Graham Dodd, where they started with railroad stocks in the 1930s. And the one thing that has not changed from Graham Dodd and Cottle is ratio analysis. So whether it's PE, P to EBITDA, P to this, P this, the answer is there's movement of the numerator and movement of the denominator. Let us begin the discussion. Mike Wilson, is the market rich? Is the market overpriced?
Well, that's an easy question, and it's definitely rich. The better question is it overpriced? And that is in the eye of the beholder. I mean, who am I to say that it's overpriced if something happens in the future that we don't expect? However, your odds of success, and here's one thing about valuation, Tom, as you well know, valuation in the short term is useless, okay? But valuation in the long term, meaning 7+ years, is perfect. So it's pretty easy to sit back and say that stocks are overpriced and rich, and your expected returns over a 7 to 10 year period are probably pretty modest, but that doesn't mean you shouldn't be invested. And there are many stocks within the stock market that are not expensive. So, it's like I said, it's a market of stocks, not a stock market. And that's the way we've been approaching it for the last year. As you know, we've been less focused on the index level and much more focused on trying to be in the right places and try to help people outperform the index, which is really our job.
Hey, Mike, you recently upgraded the financials, and we saw some good earnings just a few days ago from some of the big financial players. What's the call there on financials these days?
Well, that was definitely part of it. So, we noticed that going into earnings season, expectations had come down. A lot of the bigger institutions had lowered expectations. So it was an easy bar to jump over, easier than others even. And, with the bull steepener that's going on in rates since the labor market came out, that's actually quite positive for big banks. And so that was an easy call in many ways. It's worked out so far, knock on wood. We do think there's follow through because from our data, it shows anyways that most institutional investors are still underweight the sector. And I think so financials, at least the large cap quality financials, look to be a good place to be still.
You may have noticed we've got an election coming up in 2 weeks. When you talk to your clients, how do you kind of frame that in the short term here and maybe even the intermediate term?
Yeah, I mean, the election has definitely taken a lot of the air out of the room as it usually does at this time of the contest. It's very closely measured by the polls, not as closely measured by the betting sites. As you know, it's sort of 60-65% Trump now.
Right.
And the market is kind of taking notice to that. So what I would say is that the market has definitely moved into sort of a Trump victory, if not a Republican sweep victory. And the stocks and areas of the market that would do better, and financials is part of that, by the way, under a Trump win, has started to perform. And so I think the setup now is such that if the market plays out or if the election plays out the way the market's expecting, there's probably limited upside in those areas that will do well under a Trump victory. And I think the surprise would be is if Harris wins, then some of these trades are going to have to unwind. So this is really front and center right now for the next 2 to 3 weeks. I think this is probably 50 to 60% of the conversations we have. People are trying to just manage this. And then once the election's over, I think then the market will look forward to, okay, what should I be owning now that this event is behind us into 2025?
Mike Wilson, I'm going to go to the heart of the matter, which is you were cautious on the market while we had a leg up in this 2-year, whatever it is, bull market. But the great Mike Wilson reality is you were invested. I didn't see Mike Wilson timing the market. In this bull market, forget about shorts. I mean, trust me, folks, I've been short and wrong. I've enjoyed that feeling. Good morning, Jim Chanos, the giant of all this. But Mike Wilson on market timing. If one thing we've seen here, Mike, it's just a brutal exercise, isn't it?
Oh yeah, there's a whole graveyard of people, of market timers. We do it as part of our job. I mean, we're asked by clients to kind of, whether it's the S&P 500 or sectors or stocks. I mean, that's our job. And that's most, asset managers' job is to try and time when to buy certain stocks or do certain things with their investments. And I mean, look, sometimes we get it right, sometimes we get it wrong. I would say we had a stretch where it felt like we got everything right. And of course, that never lasts. The good news about investing is you can always change your mind, which we've done. And we've, raised our targets and we've changed our strategy to deal with what the market's giving us. And that's really the game, is just take what the market gives you. Don't fight what the market's telling you. That's the best analyst in the world, is what the market internals are saying. We use it as part of our process, actually. And I think that's the best way to be, is just be humble about it. And don't be afraid to say, hey, we were wrong. I mean, I think some people are expected to be right all the time, and nobody is. And being wrong is not a sin. It's just, staying on the wrong side of things for too long is a problem.
But Paul, the heart of this is Wilson's playing. He's participating in the market, say with Gina Martin Adams and Brian Belski coming up and all. These people that are go to cash. I mean, come on. In this bull market, they've been wiped out.
Yeah, I absolutely. And don't try to time the market, is what we've heard from the pros, including Mike Wilson. Mike, as we think about going into 2025, should we be focusing? I mean, what's going to drive this market? Is it going to be the Fed and the parlor game that Tom hates to play, or is it going to be good old fundamental earnings and fundamentals and that kind of thing?
Well, it's all the above. But I think the thing that we're focused on right now, anyways, is, look, we've been in this world of fiscal dominance for a while. We've gotten that right from 2020 on. We traded it really well at the beginning. We didn't trade it well, so to speak, in 22, 23, or in 23 in particular, and even into this year. But I think the consequences of that now are going to come front and center. And what I mean by that is, what we're focused on is, the dollar and rates. Does that come back into the picture again, which then makes equities, vulnerable to a correction at the macro level? We'll see. But I think that's going to be, like right now, what we saw in the last couple of days is rates are breaking out above the 200-day moving average. We're seeing actually term premium come back into the market. The dollar's been very strong, and that's a governor on liquidity. So I think that's the thing we're going to be watching going into 2025. And of course, what we've been waiting for is this reacceleration that seems to be elusive. And so what we need to see is growth accelerate next year. We have acceleration in our forecast, 12% earnings growth for next year after about probably 7 or 8 this year. So that is good, but that's price. I think we need to see more than 12% earnings growth next year to get this market to really power higher at the index level.
Yeah, Mike, I'm supposed to ask now Dodgers or Yankees, but I realize for you that's a secondary effort. Michigan State or Michigan? I mean, what do you think there in a rebuilding year at Ann Arbor?
Yeah, I mean, this is one that's more important to Michigan fans than you might think. I mean, Ohio State and Michigan State, you cannot lose those games. Doesn't matter, no excuses. You got to show up, and I'm confident that Big Blue will show up this weekend.
Nice. Well, Big Blue. So you got the Dodgers in there. He got the Dodgers in there. Mike Wilson, thank you so much with Morgan Stanley. Huge response when Mr. Wilson is on. Thank you for that. Out on YouTube, live chat as well. Greatly appreciate it. I mean, Dodgers, I got goosebumps. I mean, it's like, what do you think, Paul? You're the Yankees fan, right?
Yeah, I'm the Yankees fan. I'm the Yankees fan. I feel good about the Yankees, but the Dodgers are really good. I think 7 games and go for it.
Really, you think to go to 7?
I think so.
You're thinking like Fox, right?
Yes, exactly. A lot of advertising time to sell.
Yeah, we'll have to see. Very exciting. We'll have team coverage from Los Angeles scheduled to be out there poolside at the Sunset Tower Hotel. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. It's a great idea. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Investors kind of rethinking the Fed's path to interest rate cuts. Right now, we have NASDAQ futures down 0.4%. Dow futures, S&P futures down about 0.3%. To the two-year yield, 4.03%. That's little change. The yield on the 10-year, 4.19%, and that is little changed as well. To commodities, we have Brent crude, $74 a barrel. WTI crude, $71 a barrel. Spot gold higher at $2,735 an ounce. Few companies making news. HSBC breaking tradition. Its first female CFO, Pam Kaur. Now that comes as the bank unveiled its biggest restructuring in a decade. Now over to Walmart. It said it's going to offer prescription delivery to U.S. homes in as little as 30 minutes, and that could put it in better competition with places like Amazon. And finally, Lululemon partnering with Fanatics and the National Hockey League, designing fan apparel. So, Tom, yes, you can get that hockey hoodie from
Go Montreal.
Lululemon.
Yeah.
Lululemon tights? I don't
Not
see
the
it.
tights,
Lisa,
no.
I don't see it.
No. But the hoodie,
But
there you go.
Neither you nor Alex Steele will go Lululemon, right?
No, a little bit too much.
See,
there.
I was so old, we had, for our socks, we had garter straps, like a garter belt thing.
Jesus.
And then they went away from that. I wonder, are they doing Lululemon now? To hold the shin pads on? And
I don't know.
I assume they are. We'll see. Are you done, Lisa?
Yes, I'm done.
Bloomberg Surveillance this morning. All of our economic coverage is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors, a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. When we invented this act years ago, we knew it was singularly the conversation of our guests, and the honor of going from Mike Wilson of Morgan Stanley to Brian Belski of BMO Capital Markets is what the show is all about. We welcome all of you across the nation, and we'll get to Minnesota in a moment. Brian, you have killed it on this bull market. Let's get back to first principles. What's a gloom crew get wrong?
Stay invested. Going back to the hockey thing, do you remember the silver things that we connected to your sock that sometimes if you got them wet, they'd break or they'd rust?
Yeah.
That I'm that old too.
You're that old? Or they broke off and you'd have to get a dime.
Exactly.
To do it.
Exactly.
And you hoped it wasn't a silver.
No. Okay.
At least it's like blushing.
Okay.
I mean,
Yeah.
It's hockey talk.
It's hockey talk.
We're not going to talk about taking showers and sinks.
No.
On a road game. What does a gloom crew get wrong?
I think stay invested. I think trying not to time. I think people have become so afraid to be wrong they don't want to be right. I think part of this is a function of what happened during the tech wreck that was exacerbated during the great financial crisis, which created the generational buying opportunity in 2009 when we came out with our 25-year secular bull market call in 2010. So we remain resolute on this. We're entering year 3 of the bull. And I think, going forward, our longer-term trend has been normalization. We've been talking about it for 3 years.
But I've been dying to get you on. I'm so happy you're here.
Thank you
as I
so
come back
much.
from Europe. And Paul's got a million questions. Let me go right here. Your research note is one of hyper acuity. A competitive firm has just done a fan distribution exercise out 10 years. I look at it with my math knowledge and I'm like, okay, I get it. It's a marketing exercise, but what is the value of a 10-year fan distribution extrapolation? Yardeni's on the top of the green line. It's 7%, roaring 20s. I'm lost, Brian, acuity. Tell us about fan distributions. 10 years, we're on radio. Keep it clean.
We're on the radio. Keep it clean. Listen, the 10-year spectrum, and any time when you're talking about those kind of things, I think people all of a sudden get glossy-eyed because it's really more about 10 days right now, or 10 weeks. And the 10-year thing, if you look at just the compound annual growth rate of the stock market, just historically, let's just give it 13%, 12 to 13%. I think we're heading back into that. What we've seen recently is out of the norm. So I think over the next 10 years, we can clearly get up to that 7% line easy with a dividend, and then with just cash flow appreciation, I think we can get low double digits, which also will be in line with where we're going to see earnings growth as well. And so I think there's several areas of the U.S. market that are understated in earnings that people are kind of missing right now. And so I think that's what's really going to drive us for at least the next 3 to 5 years.
Do we need sector leadership here? Do we need tech to lead this market? Because I think a lot of investors have become accustomed to tech leading us, whether it's just broadly tech or AI. Does tech need to lead us over the next several years?
I think tech needs to perform. And what we've said for about a decade now, we come up with these kind of themes that people hopefully remember. And we've said that there's a certain sample of the technology sector, Paul, that is now the new consumer staples. And so I go back to 1995, 96 on my old Dame Bosworth days, and I think that we're heading back into those type of nifty 50, Goldilocks, strong earnings growth, steady performance, cutting interest rates. And the new consumer staples, quite frankly, are Microsoft, NVIDIA, Apple, Amazon, the Google machine, the Netflix machine. And I think they need to continue to perform with the market, but the new leadership in tech is going to be Qualcomm, AMD, those types of names.
So we're kind of getting into the teeth of earnings right now. We had some pretty good numbers out of global Wall Street so far. What do you need to see from corporate America going forward?
I think corporate America, I think you've seen such a great secular change in terms of cash flow distribution, balance sheet management, discernibility of earnings. I think that's what people are missing, Paul. And I think corporate America has done a great job kind of on the cost side of things. Now we need to see more revenue growth. We're going to see CapEx from technology. And here's the kicker, Tom. And I think where people are missing, and I said this before, is that financials. If you look at the average financial sector earnings growth, it's way understated. Most analysts are very negative. And I think that's where the biggest kick's going to come the next few years.
What's fascinating, and to give David Costin credit, he did a great CapEx use of cash expansion in the last 48 hours. Share buybacks lead the way. I get that, but use of cash doesn't end. Into your gloom comments earlier of 99, 2000, 2001, there wasn't use of cash going on then.
There wasn't. If you think about that market and that market quote unquote bubble, it was really led by chasing these deals, and the majority of those deals were done with stock, not cash, where we had another M&A cycle in 2007, which was also credit, but we haven't had a big M&A cycle or a consolidation cycle. So I think that's where the use of cash going forward is going to be about dividends. Look at Meta, Google, Microsoft, they're paying dividends. Apple's paying dividends. And so I think that's going to continue. But I think the key thing from a perspective of stock picking is you don't have to own the index. You want to be more concentrated. And we think stock picking and fundamental themes are going to win.
Is active funds going to have their day versus index?
Yeah. If I walk into a big account here in town, And I'm talking to these people that have been in the business less than 10 or 15 years. I talk about stock picking. They look scared. I mean, their eyes are glossed over because all they do is they own 250 stocks and they're trying to benchmark that.
Right.
They don't know about a company theme or management or ROE or ROA. All they're doing is kind of swiping and reading bullet points and doing what the hedge funds are doing. And that's why, oh, by the way, the majority of active management's underperforming.
Okay, one more question. We got to get. I want you to stay with us, Brian. I think it's important. But the basic idea, Brian, is are industrials and all going to act more tech-like? That's a story I don't think is being told.
There's parts of it, especially the ones that are manufacturing more here in the United States. But from a domestic side of things, I mean, look at Lockheed Martin earnings this morning. I mean, come on. I mean, this is a company, 25 straight years of increased the dividend, great cash flow yield. So you're going to see some technological advancement there. But I think that's where the CapEx will come in.
Okay, stay there. Don't move, Brian Belski. Let's go right to it with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 2 weeks before Election Day, Vice President Kamala Harris and former President Donald Trump are highlighting their economic policies in their outreach to Latino voters. Today, Trump plans to hold a roundtable with Latino men in the Miami suburb of Doral. His campaign says he will make the case that employment, wages, and home ownership increased for Latinos during his time in office. Yesterday, Trump made 3 stops in North Carolina, including in Asheville, where cleanup efforts continue after Hurricane Helene hit.
The power of nature. Nothing you can do about it, but you got to get a little bit better crew in to do a better job than has been done by the White House. It's been not good.
In an interview with Telemundo today, Vice President Harris intends to show off her plans to double the number of registered apprenticeships and stress how she would remove college degree requirements for certain federal government jobs. Yesterday, Harris campaigned in Oakland County, Michigan. Harris spoke to reporters about January 6th.
In America, in a democracy, we should have no room for, nor should we ever condone any form of political violence. In a democracy, people will debate, people will disagree, but not resort to violence.
Republican Liz Cheney accompanied Harris on a 3-stop swing that also included Pennsylvania and Wisconsin. King Charles is ending his first visit to Australia by a reigning British monarch in 13 years, with anti-monarchists hoping the debate surrounding his journey is a step toward an Australian citizen becoming head of state. The co-chair of the Australian Republic movement said while thousands turned out to see the King and Queen Camilla at their public engagements, the numbers were larger when his mother, Queen Elizabeth I, visited Australia 70 years ago. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
So I'm at La Campana, down by the Tiber River, oldest restaurant in the world, 500 years old. I'm having the Roman artichokes.
Nice.
And we're watching the Minnesota Vikings try to do a 2-point play late in the game. Brian Belski, what in God's name were the Vikings thinking?
That was a coaching error. I mean, they choked on that play. I mean, you know, Minnesota, we're 5-1 on the way to 6-11. I mean, it's just if you're a Minnesota sports fan, you know what I'm talking about. So there's been a rumor, by the way, that the Twins are for sale. The Pohlad family is selling the Twins, and there's been a rumor that Buffett might buy it.
Wow.
Please, God. If there's a God above, Lord Jesus, please.
15 seconds left in the game. Jake Bates, 44 yards. Michael Barr, Lions. Even talking Lions, Vikings, it's glory for the NFC Central.
The North is now the best division in football. Think about that.
Wow. Michael Barr, would you care to comment?
Well,
I mean,
no, but you got a point. All seriousness, it's there are other divisions out there that are tougher, but I will admit that the Vikings turned out way tougher than I thought they were going to be because they were undefeated, and then we showed up. And
that's what I'm talking about. The Lions. Get going with it, man. So if you think about the defense of the Vikings, and just I think that Campbell's done such an amazing job with the Lions. Yep. I think the Bears are way over their skis, but the Packers too. They just keep. I hate the Packers for the record, and I'm on with a good friend of mine later today that's a huge Packers fan. But I despise. I love people from Wisconsin, but I hate Wisconsin sports fans. I mean, whenever the puck drops or the ball gets thrown, they're crazy. Lovely people, but when it comes to sports, crazy. But I think those three teams are way understated. They're smash mouth football. It's kind of like the old
and they're
Big
all
Ten.
winning.
They're all winning.
It's like a huge skew to excellence. But the thing is, the Dodgers, Yankees are big cities, big money, and all that. How does NFC Central do it? The North, how do they do it, rather?
Well, I think first and foremost, the Vikings, they really scored with Kevin as a coach. Just like the Packers did a great job with LaFleur and Campbell and the Lions. All three understated coaches when they came in, and they've done a wonderful job. I think it's scheming. With Brian Flores running the defense, too, it's all about scheming.
Who do the Lions play Thanksgiving? That's all they care about.
Is it Green Bay?
Might be Green Bay.
I think it's Green Bay.
That'd be very cool.
Everybody
Brian
is
Belski.
over 500 in the NFC.
Yeah, think
North.
about that. Isn't that amazing?
Isn't it amazing?
By the
Brian
way,
Belski, thank you.
what happens to the Jets?
They're not. They're not the NFC North. Brian Belski, thank you so much for coming in. They play the Bears. Thank you, Ari, for that on Thanksgiving. But I'm looking at this. Here's the details. As in La Campana, people were swearing in Italian. Ivan Pace Jr., 36-yard fumble return, failed 2-point pass from Sam Darnold.
That was it.
Darnell.
Darnold, excuse me.
I'm
learning.
Former Jet. Let's just go there.
Exactly.
Okay, former Jet. That explains everything. Brian Belski, thank you so much.
brother.
Optimistic on the equity markets with BMO Capital Markets. Belski destroying futures, negative 21, now negative 32. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures in the red as investors pull back their expectations for Fed rate cuts after a few central bank officials suggested reducing rates at a slower pace. Right now, we have NASDAQ futures down 0.7%, 146 points. Dow futures down 0.3%. S&P futures down about 0.5%. The two-year yield 4.02%. That's little change. The yield on the 10-year 4.18%. That's down about 1 basis point. To currencies, we have the dollar weaker, Japanese yen weaker, euro, British pound weaker. Right now, Bitcoin down about 1% at around 66,000. A few companies making news. That's ASML. Its CEO said he expects the U.S. to continue pressuring allies to further restrict sales of its chip technology to China. And European car sales posted their first consecutive monthly decline more than 2 years in September. Stellantis saw registrations fall 26%. And higher prices have U.S. consumers cutting back on vodka, whiskey, and tequila. Drinks provider IWSR, except for Paul, says the volume of spirits sold in the U.S. in the first 7 months of the year, it shrank 3% compared with the same period last year. So they're drinking less. That's a Bloomberg Business Flash. Paul and Tom.
News you can use.
Yeah, I don't know about that.
Thank you, Lisa. Really
Not Tito's.
Appreciate that. We're going to do something different here. Are you pulled out, Paul?
Sure.
I am like completely... and Bloomberg, I'm sure, will have a world-class high-count poll coming out.
Yep.
My head is spinning. I'm like completely pulled out. Joining us now, we're not going to talk about polls. Professor Schiller, Wendy Schiller, definitive civics book for America, of course, at Brown University with all her work there and international relations. Wendy, I want to go back to Andrew Jackson. Banners, badges, parades, barbecues. If I'm elected, free beer. Nice. And while we're at it, kissing babies. I saw President Obama kissing a baby. Is McDonald's French fries the new kissing babies?
Well, I mean, I think I'm looking forward to seeing this Madison Square Garden event, I think, that former President Trump is hosting, as if it's sort of a pre-inaugural party. And, you know, sort of saying, hey, listen, I'm a winner and I'm going to win and let's start partying and celebrating. It's really, I think, a fairly brilliant campaign move because it tells his base, you know, I'm going to win. And then it also helps fuel any objections he has to the outcome. So he's starting to, you know, return to that Andrew Jackson populism. You know very well that Andrew Jackson threw the equivalent of a keg party for his inauguration, and they trashed the White House, and they had to kick everybody out.
And we miss Robert Remini every day. I read all 3 volumes of his definitive work on Jackson. Folks, visit the Hermitage if you can, east of Nashville. It is just, and you walk out the back door of the Hermitage, and there's the slave cottage right there. And it's, you just stop. Wendy Schiller, how is the vice president campaigning? Is she kissing babies?
Well, she's basically trying to pull out all the stops in what will be, you know, an extraordinarily close election. It reminds me of Bush Gore. We really didn't know who was going to win, and it turns out after Election Day, we didn't know who was going to win either. So I think this is where, you know, no stone unturned, no voter left out. You know, the opposite sort of what Hillary Clinton did in 2016. And I think the Harris campaign is counting on the fact that Donald Trump did not win in 2020, that in fact, you know, the last time he ran, he did lose. So they're, you know, keeping the faith. The polls are going in the opposite direction. I don't want to talk about that. But there are hidden things that could change things up. Like in Arizona, there is abortion on the ballot. And, you know, not everybody is always truthful with a pollster when that kind of subject is on the ballot about who they're going to vote for. So, and the same thing is true of Florida, but it looks like Arizona may have a hidden surprise at the end of the day. So that's what I'm looking at. Sort of where could we see a surprise outcome in one of these states that it looks like Trump is doing very well in?
Wendy, at 11 p.m. on election night, will we know who the new president is?
Unless there is just a really big sweep tilt towards Trump, I don't think so. I mean, if Harris is going to win this election, we're not going to know that, partially because mail-in ballots in some states like Pennsylvania are not opened and certified and counted fully until all of the in-person balloting is counted. So that's going to take us a couple of days, as it did before. We know Georgia is going to be very tight. We're seeing massive early voting in person. The vast majority of early voting in North Carolina and Georgia has been in person. So those votes are counted easily. So, you know, it could be that those results come in earlier than they did in 2020.
So given that backdrop, is there any strategy for either candidate other than to just simply spend time in these swing states?
Well, I mean, the Democrats do have a very strong turnout game. And the one thing that we haven't been looking at enough in the last couple of weeks of the election are how Senate campaigns in swing states will affect turnout and voter choice. You know, are you really going to go into the ballot booth and vote for, you know, Ruben Gallego in Arizona and then vote for Donald Trump? Are you going to go for, you know, Tammy Baldwin in Wisconsin and Donald Trump? You know, we're seeing those Democrats holding their ground by a couple of points, doing better than Kamala Harris. So how many of those voters just don't vote in the presidential election, which costs Harris a vote? Or do they actually ultimately say, well, I'm just going to vote for Harris too? We just don't know how they're going to tilt. But those Senate Democrats are holding pretty steady in swing states. And that's a curiosity. We haven't seen that in a couple of years.
So I guess the key issues here are down ballot as well. I mean, in addition to the presidential election, what's the feeling now as it relates to the House and the Senate?
Well, I mean, I think, people are saying that if Trump wins and he tilts these states, it's going to be a trifecta. The Republicans have, they have to win fewer seats to keep the House than the Democrats have to win to take the House. And the Senate will go Republican. The question is, what's the margin? So you're looking at a trifecta. You're looking at, unified party government under Trump. That's what you're looking at. If people decide they want Trump back, and I mean independent voters, disaffected Republicans, and they really don't want Harris, then you're probably going to see a trifecta, and we'll probably see some changes in 2026 in response to that trifecta. So it could be just a repeat of 2016 and 2018, what we're looking at down the road. But people should be prepared for a Donald Trump presidency and unified government, and a Kamala Harris presidency with divided government. So there are two very different scenarios that we're facing at the federal level.
And now, folks, and I was thinking of Wendy, flying back, folks, all of a sudden and suddenly it's the topic no one's really talking about. And for some of us of a certain vintage, it was the topic 50 years ago, the gender gap. Professor Schiller, the gender gap today, how is it distinctive from what I knew years ago with the editor of Cosmopolitan?
Well, the gender gap differs by generation now. So we're seeing a bigger gender gap in older voters than we used to see. And we're seeing in very young voters a bigger gender gap in the opposite direction. Men are leaning towards the Republican Party in bigger numbers, younger men than they used to. And younger women have always sort of leaned Democratic. Older women have been more up for grabs. And now we're seeing in some really interesting polling, older women, meaning over the age of 65, are leaning more strongly Democratic. So this is just a change. And we're seeing the older vote usually leans Republican by about 8 points. In polling, we're seeing that's diminished a bit. So this is just a little bit of a topsy-turvy demographic change in the gender gap. And remember, the gender gap can be also hidden in states where abortion is controversial. We saw that in 2022 in the Senate elections. We may still see that in states like Arizona. So this is really important. And then we're going to see what the Republicans do on policies that affect women after, obviously Roe v. Wade's overturned. We have the Dobbs decision. What do they do going forward? And can they maintain any kind of allegiance among women if they, continue down a path of policies that do not necessarily favor women?
Wendy, we really appreciate your commitment to Bloomberg Surveillance. She'll be with us now through and after the election as well. Wendy Schiller of Brown University. Can't say enough, folks, about the planning for the election coverage. Election night, we'll have details on that for you. But what Paul and I are going to be doing here are really across a 10-day period is a report and try to give you the conversation you want away from maybe the 20 talking points that are out there. Looking forward to that. Futures have deteriorated. The market up a stick VIX, 19.38. Futures negative 32, down negative 175 here, half an hour from trading. 2-year yield 4.03%, 10-year yield 4.19% as well. The strokes, they just sort of came out of nowhere.
Yeah.
I was like, are you kidding me? These people are outstanding. Last night.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo holding court with you. Busy hour coming up. Futures negative 30, a little bit of weight to the tape as well. Paul, none of this matters. The response on YouTube live chat to our Lions Vikings discussion. I mean, I don't even know what they're talking about. They're talking about, they have one thing here they're saying. Paul, translate this for me. Ari, help me out with this. The New York Jets only signed 33-year-olds. Is that true?
40-year-olds and 40-year-olds. So, yeah, it's been a little bit of a disappointment here.
Thanks to Brian Belski for that. But great equity coverage today. And that we've got people that are, on the plan, bull market. Mike Wilson, a little more reticent. He is in the market, participating. But there's some real nuances going on, Paul, in belief of Dow 43,018 on futures.
Yeah, absolutely. We're down just a little bit here today, but the S&P 500, Tom, up 22-23% this year. Even the equal weighted S&P up about 14-15%. So you got to feel pretty good about that. The question now is, will the earnings kind of earn into this multiple we see?
Real treat coming up. We're going to get right to it. Francisco Blanch, Bank of America, will be with us. Hugely anticipated. Right now from the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. We've got futures still falling. Another busy day of earnings. We want to get to some of them right off the bat. We'll start with Post-it Notes Maker. 3M shares up 5%. Posted better than expected third quarter earnings. Adjusted its guidance for the full year. You have General Motors. Posted better than expected results the latest quarter. Raised the low end of its full year profit forecast. Strong U.S. demand. SUVs and trucks that really made up for electric vehicle losses and a slump in China. Those shares, though, they've been back and forth. They were down, now back up. Right now, about 0.1%. And shares of GE Aerospace down 5%. Sales fell short of expectations last quarter. It's dealing with supply chain limitations that are weighing on their deliveries. Over to futures right now. NASDAQ futures down 0.6%. Dow futures down 0.3%. We have S&P futures down about 0.5%. The 2-year yield 4.03%. That's little change. The yield on the 10-year 4.18%, and that's down 1 basis point. To commodities, we have Brent crude $74 a barrel. WTI crude $71 a barrel. Spot gold higher at $2,736 an ounce. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. So, I'm having a dinner. Mrs. Keene said we got to have one fancy dinner.
Okay.
So we did this incredibly wonderful dinner at a place called Imago. I wasn't allowed to see what the bill was. And, I had the beard going. But, I'm just.
Now, why
I'm
were
not
you doing the
getting
beard for Italy?
I'm trying to be George Clooney. And it's just not working.
It's not. I was about to say, is it working?
It's just not.
Even with the
working.
Vespa.
So Mrs. Keene turns to the waiter or the maitre d', whoever he was, taking our money. And the food was phenomenal at Imago. Food was phenomenal at Imago. But Lisa, I said, well, she says, who's the most famous person? Well, George Clooney was in here like 3 or 4 days ago. I can't keep up.
Yeah. It's Roma.
I had a tantrum. I shaved my beard and on we went. Clean shaven as well as Robert Tipp. We are thrilled to have him with PGIM with decades of experience in bonds. Robert, forget about the nuances of fixed income. What does the fixed income market, the dynamics of price and yield, what's it signal to you about the state of American finance?
Yeah, well, I think the government finance, we're getting a statement there. It's kind of hidden inside of the bond market. But when you look inside of the interest rate swap curve, you can see that the U.S. government is paying a lot more to borrow these days than it used to in decades gone by. Yeah. We're approaching about a 1% premium at the back end of the curve, in excess of kind of the risk-free rate, if you will, to borrow for 30 years.
Robert, I look at this and I was so honored. Mr. Peterson's people called up Pete Peterson, and I was so honored to do an interview at his residence as he was failing. It was really a last conversation with a giant, Pete Peterson. He and Tsongas, Sam Nunn, and others have complained. Are we now at the agony they predicted with our fiscal debt?
Yeah, we're in a bad situation in the sense that there's a hidden kind of theft going on, in the sense that the government is pushing into the market with its borrowing, and it is a preeminent borrower. The U.S., and it's not just the United States, it's the European governments, and all around the world, these governments with 100% debt to GDP. Basically, these are wartime debt levels. And it sops up the borrowings, the money from circulation, And then private sector creditors have to pay more in order to borrow. So there's a, kind of a hidden cost going on there where people want what they want from the government, but it's not free. And so far, it's been relatively uneventful in DM economies. There are some places where we've seen hiccups, some small like France, some big like Greece, but it's a problem, and there's cost.
Robert, it's been a problem, and there's been a cost since I've been in the business. I've been on Global Wall Street for 35 years. It's out there, but it just never seems to come home and roost. And what changes that, if anything? I mean, I'm almost of the opinion, I'm just not worried about it.
Yeah, well, these problems, they do come home to roost. And you see it frequently in emerging markets where there's a challenge and an opportunity for investors there. But you've also seen it in DM markets. I mean, the Italian government has paid stress prices in 2018 all across Europe. In 2012, there was stress. I mean, we're talking 600 basis point spreads on Spanish debt. And we saw that in the mid-90s as well on European peripheral debt. Now, these spreads that we're seeing on European debt now are a fraction of what they paid in 1990. So the Eurozone experiment for them has been a tremendous way of structuring this and getting them into a way of managing this on a way going forward. But we saw some real disasters on the way there with the Greek default, for example, and the extreme stress that we saw in Cyprus. In the United States, it's a subtle, subterranean thing that people are not even aware of. France, though, popped up and had a little bit of a hiccup the other day. So, it is manifesting in different places. It hasn't hit home big time in the U.S., though.
Robert, let me frame this out. The Bloomberg Total Return Index in bonds, off Lehman, ex-Barclay, thrilled that Tom Secunda and Mike Bloomberg could make this happen. Never, 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 Robert Tip, did I think that index on a price basis could rally up to the long-term great moderation trend. We're only like 13% away on price appreciation from bonds getting back to that trend before the collapse of 2021. Never did I think I'd frame this in October of 2024. Do you see price up, yield down to get these broader fixed income indices back on a 10 or 20-year trend?
Yeah, absolutely, Tom. I mean, from, the middle of 2022, you could see that central banks were serious about controlling inflation. So, there's kind of a countervailing force here. On the one hand, all of this debt issuance creates value in government bonds as long as they're not defaulting. And the fact that you have central banks that are controlling inflation is going to limit how high the interest rates go. And so it became apparent really from the fourth quarter of 2022 that we were going into a tremendous bull market period for the bond market. And that's what we've been in.
I mean, folks, to be honest, and I'm not doing this, but it would be my chart of the year right now. Sure. I mean, never, 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 Paul, did I think we'd get back to the optimism Robert Tip just paints for us in fixed income at PGIM. Robert Tip, thank you so much. Let's do this again soon. Just wonderful as well. Francisco Blanch coming up, I believe, here in about 6-7 minutes. Market craters off Lions-Vikings football. Futures negative 34. With our news from Detroit, Michael Barr.
Thank you very kindly, Tom, Paul, Lisa. About 14 days left until the election. The latest poll of registered voters from Reuters and Ipsos shows Kamala Harris leading Donald Trump by 3 percentage points. That is within the survey's margin of error. We get more from Bloomberg's Mike Shepard in Washington.
Interesting in this poll that it's registered and not likely voters. And what we want to look at really as we get close to November 5th and the finish line is what's happening in the swing states, because that is really what is going to tip the balance in the Electoral College one way or another.
Bloomberg's Mike Shepard. And pay attention to your mail-in ballot. An error could get it thrown out. Ben Hovland, the chairman of the U.S. Election Assistance Commission, says it has to do with your signature.
It's a safety measure that a lot of Americans don't know about, is that your signature is compared to the one on file. So when you sign that absentee or mail ballot envelope, election workers who are trained look at that and compare it to the signature they have on file. Usually that's from your voter registration.
Ben Hovland with the Election Commission also says your mail-in ballot will get rejected if you forget to sign your ballot altogether or don't get it there on time. Secretary of State Antony Blinken is in Israel today, meeting with Israeli Prime Minister Benjamin Netanyahu. On Gaza, U.S. officials say they want to make advantages of the killing of Hamas leader Yahya Sinwar to push the conflict towards some kind of resolution, as well as focus on the lack of aid reaching the most desperate areas of northern Gaza. They'll also talk about Israel's attacks on Hezbollah in Lebanon and the potential for Israeli retaliation against Iran. Exercise can help women who experience brain fog after chemotherapy. A study published in the journal Cancer looked at the decreased ability to remember and concentrate that some women report after receiving chemo. Women who did regular aerobic exercise showed improved cognitive functioning. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney on this bull market and strapping it all in. One thing we haven't seen, it saved me in Europe, is Euro 109 down to 108.
Oh, yeah.
Yen out to round it up a 150.
I saw that.
The reascent of the dollar is humbled the dollar bears.
It has. And, we've got the Fed. We thought we were going to have a pretty solid, steady rate cuts. And the strong economic data over the past couple of weeks has kind of called that into question a little bit. Maybe they can be a little bit more conservative. So a little bit of strength there to the dollar.
I got the burrata caprice. It's like burrata and tomatoes and secret sauces and that.
There you go.
And, then Mrs. Keene goes, well, let's look at the Fendi on the menu.
Yeah. I
thought Fendi was like a food group. Lisa, help me here.
You are out of luck, my friend.
Good morning, Fendi in Rome. I mean, they are on a roll. I guess they're owned by LVMH.
Yes.
And one of the original granddaughters is still there, creating, doing.
Okay.
It's really amazing to see. And to see tourist Rome consume this stuff. The biggest line we saw, the VAT thing, you get your money back if you buy something. That was like 150 people long at the airport.
Yeah, I did that in Ireland as well. But they took care of it for you because they sent my stuff home that I bought there. We bought so much stuff for everybody's getting Irish stuff for Christmas. So we had to, and they took care of all the VAT stuff for us.
Yeah, you bought, 10 cases of Guinness?
Yeah, exactly. A couple cases of Jameson. Well, everybody's going to be happy this Christmas.
Come on, we'll have some more. There get some good stories here. We did the Vespa was just unbelievable.
Yeah, that's the way to go.
It was just like, I could not believe how Greg Peck I felt. Futures at -30. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. We have futures in the red. S&P 500 set for its first back-to-back drop in 6 weeks. Citi warned exposure to the S&P 500 has reached levels that were historically followed by a 10% slump. Let's check in with S&P futures down 0.4%, 28 points. We have Dow futures down 0.3%, 148 points. Nasdaq futures down 0.6%, 123 points. The 2-year yield 4.02%. That's little change. The 10-year yield 4.17%, and that's down 1 basis point. To currencies, we have the dollar stronger, Japanese yen stronger, euro stronger, British pound right now weaker, and Bitcoin down more than 1% at 67,000. More earnings. Let's get to Kleenex maker Kimberly-Clark. Their shares down 5%, cut its forecast after a sales miss, and they're saying that stores that sell its products, well, they're lowering their stocking levels. And Verizon down 3%, reported third quarter revenue missed expectations. That was due to a slow phone upgrade cycle. After the bell, we're on to Texas Instruments for more insight on the chip sector. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul, I just looked. I did not follow BitDog in Rome, but it didn't hit 70,000.
Close.
But that's close.
Right up there. Yep,
Yeah.
right up there.
But that's interesting.
Yep.
This is a thrill. Incredibly busy. Francisco Blanch joins us now, driving commodities at Bank of America. And what's great about him is it's not just Brent. What's Brent crude going to do? Move on. Francisco Blanch here now with an essay a number of days ago. Is gold a safer investment than full faith and credit United States from the cash room at the Treasuries? Francisco Blanch on gold. Is it going to 3,000, Francisco?
That's our target for next year, Tom. So we expect it to get there over the next 12 months.
What does it signal, in particularly versus full faith and credit American debt?
Well, there's a few things going on. First, I would say that, as you know, 2.5 years ago, the U.S. and the European governments decided to freeze Russian central bank assets. And as you're fully aware, central bank assets are essentially a rainy day fund, so to speak, for nations and for financial systems. So I think as a result of that decision to freeze those assets, about half of the Russian central bank assets, we've seen a big rotation away from treasuries and European government bonds into gold across the global central bank community. Remember, these chaps don't care so much about return. What they really care about is safety. And by virtue of freezing those assets, we made them unsafe, or a little unsafe for some. Again, not unsafe for you or for me, but definitely unsafe if you are outside the US-Europe sphere. And there's many central banks that feel a little bit trapped between this kind of US, Europe, and Russia, China dynamic. So that's been a big factor. And then, of course, we've also seen interest rate cuts, which have finally started to draw some interest from investors.
Tom, one of the many reasons I like Francisco's research is he has an exhibit 6.1 acronym list for all the acronyms and what they mean in his research. So thank you for that, Francisco. It helps reading your research. Talk to us about global energy here, Francisco. We've had a big risk premium put into Brent crude, WTI crude. That part of that risk premium came out, but now it's kind of creeping back. How do you think about the cost of global oil these days?
Well, so when it comes to Brent, we have a $75 average for next year, which is right around where the spot price is and a little below where forward markets are. But so we're not terribly bearish. We are more in the range-bound camp. There's a number of analysts and agencies out there talking about this massive surplus evolving into 2025, particularly as we see OPEC Plus returning barrels to the market. But in reality, we have a very, very tense geopolitical situation in the Middle East. And remember, part of the reason we've seen a reversal in balances is because from the White House, we've seen a very concentrated effort to push more energy into the system after we hit 10% inflation a couple of years ago on the back of the Russia-Ukraine invasion. So we've seen effectively the release of the SPR, 40% of it. We've seen a big ramp up in U.S. supply. And then we've seen really Russia, but also Iran and Venezuela moving up on their exports throughout the last 3.5 years. So I think once we go past the U.S. election, that pressure to keep oil prices lower or bring them, keep them below 80 or something, it kind of goes away a little bit. I think the focus becomes geopolitics, really, for the next government, whoever that is, Harris or Trump.
Francisco, on gold at 3,000, thank you out on YouTube, the live chat there, really discussing gold at 3,000. Francisco Blanch, two ideas here. One is the ETFs. Lisa Mateo is in the gold ETF fund where they insist on taking physical delivery. It's like Bitcoin, Paul. Yep. I mean, Francisco Blanch, are we way behind in ETFs taking gold for physical delivery, and that'll support the price?
Well, so there's plenty of ETFs that take gold in physical delivery, and that's definitely a price support point. We've actually run a fair amount of analysis on this. What we found is that physically backed commodity ETFs, which are mostly on gold and silver, tend to positively impact prices when flows go in, and the reverse is also true. And again, the way I think about this is you're essentially taking ounces out of circulation that would otherwise go into jewelry or other uses. And that's why physical ETFs have an impact on prices. And again, because interest rates went up so much in the last couple of years, and we were trained to get paid zero on our bank deposits and on our safe assets like our T-bills. The ramp up in interest rates essentially encouraged investors in the West, in Europe and the U.S. to sell their gold and buy fixed income securities or bank deposits.
I get you this question in, Francisco. We've got time for one more, and that is emerging markets. You've got a hockey stick chart of emerging markets buying gold. Will that continue? 6% of value, now up to 10% of value. Will that vector just keep climbing?
I think it'll keep climbing over time. The biggest risk to the gold market is, and we're starting to see a little bit already, if there is a move up, a very sharp move up in interest rates in the U.S., because there's a clean sweep in the election, either on the red side or on the blue side, we're likely going to see tax cuts. And again, we already have a very large budget deficit. I'm afraid that may push up longer-term yields, and that would be a negative on gold prices. Will be also quite a positive turn of events for the dollar. Then the other issue is what happens to Russian central bank assets if the Russian war with Ukraine ends for one reason or the other. Will Russia get their money back? This question really matters for the gold market, in my view.
Francisco, 30 seconds left. Best value in the global commodity space that you see right now?
I think in terms of upside potential, we still like copper, and we still like the industrial metals. We think China's going to put some stimulus in place, and we also think the energy transition will drive those markets. And we also like silver, by the way. We think silver is a really good play on both the precious theme, but also on the energy transition. The best electricity conductor out there is silver.
Encyclopedic. Francisco Blanch, never enough time. From Madrid, thank you so much. He's head of commodities for Bank of America. Again, we protect the copyright of all of our guests. The research is just brilliant. Just can't say enough about the gold research note of Bank of America on October 16th. It was just absolutely definitive. And you heard him say gold to 3,000. Where are we right now? 27.53. We're almost like a record high.
Yeah, I mean, just been hitting new records every day. It's amazing.
You know, Brent crude back. I mean, down. People were talking about it in Rome.
Yeah.
Guys betting, 80, 85, 90 and getting run over.
Yep.
74.78 on Brent. What do you see on the Bloomberg Launchpad, Paul?
Looking at the futures here, Tom, we're going to get the market open for you in just moments, but just a little bit of red on the screen here. The S&P off about 0.5%, and the NASDAQ off about 0.6%.
Earnings season 2 will continue to dive in. Lisa Mateo driving our earnings coverage. The governor of the Bank of England walked by with his entourage. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. A lot of company earnings for investors to look through today. We've heard from the likes of General Motors, Kimberly-Clark, Verizon, 3M, General Electric, so many more. There's actually more than 30 companies opening their books for today. So let's get to the reaction on Wall Street as we start to kick things off. We'll start with the S&P 500. Right now, that's down about 0.4%, 27 points at 5,825. The Dow down 0.3%, 155 points at 42,794. And finally, the Nasdaq down 0.4%, 83 points at 18,455. The two-year yield 4.02%. That's little change. The yield on the 10-year 4.17%, and that's down 2 basis points. To commodities, we have Brent crude $74 a barrel, WTI crude $71 a barrel. We've been talking about gold. Spot gold right now up about 0.7%, $2,739 an ounce. Finally, currencies: dollar weaker, Japanese yen, euro stronger, British pound weaker right now. Bitcoin down about 1% at around 67,000. Since we mentioned earnings, check in with a few of them. We have GM up 3%, 3M up 4%, and we have Verizon right now down 4%. That's your opening bell report, Tom and Paul.
Yeah, I don't know where to go on that on Verizon. I mean, you know, I looked at it, and you mentioned they have a ginormous dividend.
Yeah, they got like a 6.5% dividend yield, and they've been growing the dividend, a couple of percent every year. And it stocks up, 15, 16%. I mean, that's it. That's what these companies are.
Short-term it is, but on a long-term basis, 3-year buy and hold.
Oh, I don't know.
10-year buy and hold.
It's just, you're scrapping for those wireless subscribers. It's so competitive. The churn is so high that it is a tough business. 3 players in a wireless business. It's a tough business. Oh, and you have to compete against the cable as well for broadband.
Opening bell down -150, SPX -32, down 0.5%, NASDAQ down 0.7%. And the opening bell report is brought to you by BNY. BNY's expertise, their insight can help clients achieve their ambitions. Visit BNY.com. We thank BNY for their support, particularly for giving us Jeffrey Yu.
Yeah, he's pretty solid young guy.
Miss Levine.
Yep. Yes.
Your terrific insight. I got up in front of me here the Standard & Poor's 500 because while I was sojourning over a Vesper. Vesper's the drink of choice over there. Very bondish.
Okay.
Little lemon peel and there's a bunch of other stuff in it. And if you have one, you're done. It's one and done.
Right.
So I'd put it. But we had a 2-year celebration of a bull market. And Paul, you could even take it back to a 4-year celebration off the horror that we all faced in early 2020. But the 2-year bull market, can we pause for Edward Yardeni and Ralph Ancampora?
Yeah, absolutely.
The great technician came on. And they said October of 2022 was the bottom of a bear market from January of 2022.
Yeah.
Prescient would be,
exactly right. And you think about 2022, Tom, there was no place to hide. Stocks were down, bonds were down double digits, the worst year the bond market had ever seen. So 2022 was a give back year in a big way across most asset classes here. But we've rallied since. And I guess, and in hindsight, we all look kind of smart. But when you're raising interest rates, 500 basis points, I guess you can expect some headwinds there. But as people started to think about, have rates peaked and when will the Fed start cutting? They started thinking about that in 23 and coming into 24. There you go.
We're having an event here at Bloomberg, the Bloomberg Global Regulatory Forum, and speaking, and we will go to the Q&A here in a moment, is the governor of the Bank of England. And Paul, I'll tell you, you look at the British press and the continental Europe press that I was looking at Le Monde in English. No, folks, I can't look at Le Monde in French, wise guys. But, you look at it and, the bottom line is whether England is a vibrant part of a G7 financial system. And I'm sorry, there's some real doubt there. Megan Green, on surveillance constantly, now a member of the Bank of England Governing Council, and Megan Green just made clear this is about United Kingdom consumption and getting the spirit back off of Brexit.
Yeah, and I think with the Brexit, everybody's learning to live with that and what it means for individuals, what it means for companies, what it means for industries, and for a lot of folks and a lot of companies and a lot of industries, it's made life, just a lot more difficult. And I guess the economists are trying to, really get a good handle on to what extent that is in fact impacting economic growth in the UK. So. It's something that I think that's why we've got this new government there, or one of the reasons why we have the new government in the UK.
I mean, I've got Standard & Poor's 10 years trailing up 13% per year. Brian Belski framed that out. Maybe he was a little more cautious than that. The FTSE index, with dividends reinvested, the iconic British index, is up half as much, up 6%. That's in sterling. You can, on Bloomberg, folks, you can convert that right over to U.S. Dollar. And on a dollar basis, I'm getting it, it's up only 4.4%. So less than half the performance.
Yeah, you talk to, when we speak to Tim Craighead at Bloomberg Intelligence, who covers the European markets, he'll tell you a lot of that underperformance is because they don't have tech exposure in the UK. What they have is more industrials, more energy, that type of thing. So it's just kind of the makeup of the markets. But you also, it's a much lower valuation than in the U.S.
The governor of the Bank of England speaking here at our Bloomberg Global Regulatory Forum. We're pleased to have the perspective of Damien Sassower joining us. I'm not going to make a joke. It's not an EM. It's not a frontier economy. But how vibrant is post-Brexit United Kingdom?
The United Kingdom, we're talking about Andrew Bailey here. Look, I think the UK, if you look at what's priced into the forward market, and I haven't looked yet this morning, Tom, I have to apologize. I've been very busy with the Global Regulatory Forum. I just had a Saudi delegation passing through. We were talking about the Rial and the potential for Saudi to float that. But as it relates to the UK, there are more cuts that are priced in, probably not as much as should be if you listen to the experts. I mean, you look at the ECB, they moved 25. The markets were calling for that. But I think you could see an awful lot more out of the UK. And I think pound sterling is going to take a bit of a hit here off the back of that. So anyway, that's the UK for you. But I mean, Tom, I was in Brazil. I was in Brazil last week, and what I learned from pretty much being there is that there is some real concern about the U.S. election, right? Justifiably so. If you look at forward markets, they're pricing in a 3 to 4% move on the U.S. dollar in either direction around the election. If you're an emerging market practitioner, that's a lot of volatility.
Are we seeing that dollar move now? And when I was away, Damien, all the places you gave me in Rome, they really worked out, Damien.
I like that picture of you on the moped. I don't know, it was hot.
That was great. I mean, it was a little slippery, actually. But Damien, help me here. With the dollar move we've seen, is that getting out front of the election?
It's starting to price a bit of a Trump victory, and yes, I think that's what the markets are kind of telling you here. And so, look, what's the worst of all scenarios? Paul and I talked about this yesterday from an EM practitioner perspective. The worst of all scenarios is a red sweep. Why? Because it means you're going to get higher tariffs than if you would under a Harris presidency, and you're going to get fiscal stimulus like you've never seen it. So U.S. yields are going to pop. It's going to be good for the dollar because yield differentials with the rest of the world, specifically EM, will compress, and that's a given. I think the best outcome for emerging markets, and this is what a lot of them are kind of looking at, is if Kamala wins and you have a divided Congress. But nevertheless, Tom, they all want to hedge around this risk. And with volatility at cycle highs in equities, FX, and rates for that matter, it's become expensive and prohibitive to do so. So I think where some of the smart money people are looking is they're looking to credit, because credit spreads, and I said this to you yesterday, Paul, they've not budged. I mean, they're still exorbitantly tight. They're priced for perfection. And if you do believe something's going to break here around the election, or as we push further into year end with all the T-bill issuance we're going to see, perhaps playing CDX or CDS or some sort of spread widening move is the low cost way of putting in some sort of a tail risk hedge.
Are you sensing that your clients, are they just, to the extent they can, just taking risk off the table, sitting on the sidelines? If I'm usually fully invested, maybe I'm a little bit less so today, or if I'm hedged X%, maybe I'm hedged maybe Y% now.
Well, I do think so. I think a lot of people have tried to, take their exposure down, take their beta exposure down, take their gross positioning down, certainly. And, I think what you're going to probably find here is that, most investors are still looking for the no landing, soft landing scenario. And I think you've seen a lot of hedge funds and speculative money, if you just look at the futures market, venturing out and getting short U.S. Treasuries here. And I mean, now where are we? I haven't even looked at the 10-year 415, something like that. I mean, this is getting to a point here where we're breaching technical levels. If you get Ira Jersey on.
Damien, 4 417.
417. So this is what I mean. We don't know what's upstairs. I mean, Ira was talking about this just on our morning call. Once you break some of these levels, there are some big gaps, between, if you look at Fibonacci levels and that kind of stuff, which Ira does. So we can go from 417 to 4.25 pretty quickly, So I think this is where the markets are. And, I think they're right to kind of start, testing and pulling on that string a bit,
Right.
given what we're seeing out of retail sales and inflation.
And on the bar menu at the Hassler, the Fibonacci, it was just such a good
To die for.
It was just to die for.
The 1997 Fibonacci. All right, so Damien, where is value in your world today? If people are really looking for value as opposed to playing the latest, hottest trade, where do they see value?
Well, I was in Brazil for a reason, Paul. I was looking for value there, and I did find a bit of it. I do believe that, if you look at every market, G10, EM, or otherwise, there are very few that are pricing in rate hikes. Yeah. And my goodness, in Brazil, they are pricing in over nearly 200 basis point of rate hikes through the middle of next year. I mean, they think that inflation is still a pretty big problem locally there. I see what they mean, because it is really, really, really cheap to get a nice meal in Sao Paulo. I have to be honest with you. I mean, the sushi there is unbelievable, and it was super inexpensive. And so there's a disconnect there. But I mean, again, I do think that, inflation, quite a bit is priced into the forward curve. Yeah.
So November 7, I believe we have a Fed meeting on to Christmas, December 18th what is the outcome your world wants from a November 7 meeting? What's the best outcome?
They still want rate cuts. They want 25-25. I think that's where the market is right about now. And I think, if you are
Why not?
I mean, look, I don't know. I mean, you got to ask Torsten Slok why not. But I mean, like from where I sit, I do believe, the one thing that the Fed was pretty clear about is that they didn't want it to be a stop and start sort of cycle here in terms of rate cuts. And so, to go 50 and then to not go, I mean, that's exactly what they don't want to do. So I think they're going to probably, for all intents and purposes, go 25 and probably another 25, and then maybe we get to 4.25 in the first quarter of next year, and then they see where we are.
We welcome all of you around the world on YouTube. Subscribe there to Bloomberg Podcast, growing each and every day. On Apple CarPlay, Android Auto, and I learned on Spotify. A lot of people on Spotify, Paul, particularly internationally. Absolutely. I underplayed that. We're waiting for question and answer at a Bloomberg Regulatory Summit with the Governor of the Bank of England, Andrew Bailey. He's making comments now, and we'll give you that Q&A. Paul, maybe get one more question in here to Mr. Sassower.
Damien, one of my favorite emerging markets has been Mexico. There's been lots of opportunity there. Where is the Mexico call today? How do you frame out Mexico?
Well, that's a great call. I mean, look, Mexico's an interesting one because it's so close to the U.S. A lot of people use it as a Polish hedge, I guess, a way of getting emerging market exposure, Tom, without necessarily going to a real emerging market.
Like
that's why people like Mexico. But if you look at the yields that you have on offer, still double digits, very, very, very similar to what you're seeing in Brazil. But again, in Mexico, the Banxico, the forward curve is pricing in a ton of interest rate cuts, not hikes. And so that divergence between Brazil and Mexico and those economies, I think it's gotten pretty wide. I think it's going to snap back. So if you're looking for value, and I think you're probably getting along the real versus the peso here. And I believe that trade might make sense because it kind of, on the yield differential basis as well.
In your trip to Brazil, but frankly, Damien, with your reach, you mentioned you met with Jeddah and Riyadh types today. Mm-hmm. How do they respond to our burgeoning debt and deficit? I mean, I get how the Swiss respond. It's immoral. Okay, but EM after 1998, they can't be humored by our debt and deficit, are they?
Well, if you think about it, the Saudis historically have been a source of capital for the U.S., right? I mean, they invest in our assets here, right? Historically, because they had such big surpluses, right? Golf money. Well, that's changed
I'm thinking
a bit.
the game of golf.
Yes. Live, right. Oh, sorry. I said golf. That was good. What I'm saying here is the Saudis are in town, and they're in town for a reason. They are in town to raise money. They have projects. They need funding. They have local markets that are developing. They have, they have a middle class that is developing. They have a market of very wealthy, talented service sector professionals who basically need to put their money somewhere. So, there's a lot going on in Saudi, but let's bear no bones about it. They are here to raise money from the U.S. because they want money to come into foreign direct investment to come into Saudi Arabia. And my goodness, they are growing like a weed. So, they've had some good meetings and they've been pretty successful. And at least in the meetings I've been privy to, investors are drinking the Kool-Aid, Paul.
Really?
So,
Because don't they just? Why do they need capital? Aren't they the source of capital for the rest of the world?
not really so much, I guess, anymore. I mean, like they are not really. If you just look at a lot of these sovereign wealth funds, quite frankly, like they've been. The Philippines. We had Mar-a-Lago on here just a few weeks ago, remember? And they're investing in the Philippines. Their sovereign wealth fund, their mandate is to invest in infrastructure projects domestically in the Philippines, not to invest in the Mag 7 or anything like that, which is historically what Salma and the Saudis have done.
Damien, stay with us. We're going to see what the governor does. He's into some extended comments here at the Bloomberg Regulatory Conference. Let's do this. Let's get a Bloomberg business update with the Dow negative 188. It is needed. Here is Lisa Mateo.
You've got it. And we've got stocks headed toward their first back-to-back decline in more than a month. Investors will weighing that pacing of Fed rate cuts globally. The IMF lowered its global growth forecast for next year, warned of accelerating risk from wars to trade protectionism. Now let's get to the U.S. markets. We'll head to the NASDAQ right now, down 0.2%, 44 points. We have the Dow down 0.3%, 170 points. The S&P 500 down 0.4%, or 23 points. We have the two-year yield, 4.02%. That's down 1 basis point. The yield on the 10-year, 4.17%, and that's down 2 basis points. Shares of Lockheed Martin, they are lower, down about 4%, and this is despite raising its outlook for the second time this year. Sales of its missiles and radars, well, they were higher than expected in the third quarter. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. He is a most different governor or chairman of the Fed type, governor of the Bank of England. He is out of history at Cambridge, particularly. His thesis, are you ready for this, Paul? The impact of the Napoleonic Wars on the development of the cotton industry in Lancashire. Sounds like a Beatles song late in the
Yes.
Andrew Bailey is very different and has always been hugely distinguished in crisis. Our Konstantin Katsias, European Director of Bloomberg, with the Governor of the Bank of England.
Key areas of risk. Where do you think, in terms of prudential supervisors or market supervisors or policymakers writ large, the focus needs to be to ensure it stays front of mind?
Well, I think I'd draw out 2 points. First of all, I mean, it is absolutely right that governments are focused on growth, and I support this because as central banks, we want to see it as well, because if we have weak potential growth in our economies, then we have a natural speed limit in terms of what we can do in monetary policy. So it's, this is an agenda that we share. I think we need to do 2 things. We have to emphasize that the best way to get sustained growth is in an environment of both monetary and financial stability. That's what central banks are here for. That's what we provide. We have to be prepared to have a very open dialogue about what the right balance of conditions are that support that. But it has to be a two-way dialogue. It has to start with, we do understand why financial stability and monetary stability are the best platform for growth. And then the second point I'd make is this question about surveillance. We have to, we are going to reach a point, and we are reaching a point. I totally agree with Klaus on the point about implementation, though, where I think we need to pivot from, if you like, rulemaking to surveillance, to understand, when we see some of these pressures in the system. And I agree with Klaus. There's a glass half full and a glass half empty story about the last few years. The glass half full story is we've had some very big economic shocks, and the global financial system has not come unglued. The glass half empty, we have had to deal with some quite big incidents at the time, and that's why I made this point. We've got to have the tools to deal with them. But then we have to have what I call this effective surveillance tools to spot where these problems are and how we deal with them earlier.
And just picking up on the effective surveillance points, is that because some of these new areas, whether it's private credit, private capital, are building up, and so prescriptive rulemaking may not always be I mean, you've got a unique perspective because you were the head of our British... By the way, the Heineken advert, I'm not sure is going to resonate with our American audience. I don't know that it was...
I saw the Europeans were smiling.
It was a very British... It's about a beer that would refresh you in ways that other beers couldn't, just to clarify that one. But is that because of those new potential risks that are building up in the system, prescriptive rulemaking won't always capture, and therefore surveillance writ large is going to have to be calibrated accordingly?
Yeah, it's partly that. I think the non-bank world, I think Klaus is making this point, the bedrock of regulation in the non-bank world historically has not been financial stability. It's been actually, far more sort of, in a sense, coming out of securities markets, market efficiency, if you like. I completely understand that. The second thing is that it is an opaque and highly disparate world.
Yeah.
I mean, the banking world, look, it challenges us, but it is actually much more homogeneous. So we have to have these tools that say, how do these rather disparate and opaque pieces fit together? And therefore, if you sort of put a shock into the system, how does it flow through, and where does it reach the points when the problems can occur and knock into a broader system-wide problem?
And the Bank of England system-wide exploratory scenario is a piece of that.
It's a first step in that direction. I'm very excited by it. We're going. I hope. I don't hope. I mean, we're going to report the results before the year end. I'm very excited by it because I think we've worked with about 50 firms across the whole range of banks, non-banks, infrastructures to do this sort of flow test exercise and say, here's the shocks, and then flow them through the system and see how people react and say, well, so what do you do? Yeah. How does it affect you? And then what would be your response? And then we can say, okay, well, that's plausible, or, oh, sorry, you think you're going to do that?
Yeah. And in that response mechanism, Klaas made the point that referenced back to 2008 and said that the level of coordination was proportionate to the shock, seemed to sort of flag the idea that perhaps there's some fragmentation in the system now that may generate some hurdles to that. What's your sort of take on that?
Well, I think in 2008, I mean, because the focus was far more on the banking system and the focus was far more on sort of coordination amongst banking regulators. What some of the issues we've had in the last few years have underlined is how much broader it is. So you take the LDI crisis. Of course, that was essentially an issue in the pension world. So, again, no disrespect to the UK pension regulator, but their objectives were not cast in terms of financial stability. They were cast in terms of the things that matter to pensions. So, that was something we had to sit down and discuss with them and say, yeah, but you won't be able to achieve your pension objectives if the thing isn't stable.
And the point you were making, the Cassandra analogy, seemed to, perhaps if I interpreted it correctly, was we have all of these potential new risks, as you say, private markets, AI, technology, but in fact, actually, what we're seeing is a lot of the same things in the system potentially repeating themselves. Liquidity mismatches, real estate bubbles, those sorts of things. And so we need to continue to be mindful of...
Yeah. I think what I slightly impolitely call the laundry list approach, which says, here's your top 10 risks. It's obviously important, but it can miss getting to, as Klaas was saying, these sort of common themes that act as the problem. So leverage would be an example of that. So if you take a good example. I mean, what risk has come up the league table since the financial crisis most? Well, we can argue about it, but cyber risk could be up there certainly. Now, cyber risk, of course, is unique in a sense. It's got many unfortunate, unique capacities. But, of course, we have to then say, and this is how we have to come into it, okay, what would be the concept? How would that flow through the system? Yeah. What if we had a major cyber attack on a part of the financial system, if it immobilized part of the financial system, what is the sort of the system-wide impact of that?
Just going back to one of the points you made earlier on, taking your laundry list, I mean, I'll put the same question that I put to Klaas. 2025, hopefully we can get you back here again. And we were to say, what's the one thing, if you could pick out, that we should, is it the leverage in the system? Is it indebtedness? Is it that ensuring that we're looking at the holistic, system-wide risk? What would you say is something we need to kind of, on the dashboard, look out for?
Yeah, so I think the thing about leverage is this. It's not simple in the banking world, but it does reduce to something that you can sort of proxy by a sort of a ratio. It just is not like that in the non-bank world.
Yeah.
It is diffuse. You're looking for sort of points of blockage, as it were, and how it interacts with a shock. So that's the first thing I would say. We've got to have better tools to, I think, get into the bottom of that.
Good morning, everyone. Paul Sweeney and Tom Keene here. You've been listening to the governor of the Bank of England at the Bloomberg Regulatory Summit, talking about the regulation challenges of the United Kingdom. Paul, to me, the major challenge is the salary compensation war between Paris and London.
Yeah.
It is daily in the continental press. I saw that when I was over there. It is a pitch battle There's no Bank of France maybe to talk about because it's often Frankfurt now. Speaking of Christine Lagarde, she will be with Francine Lacroix here at the top of the hour. But Paul, the compensation battle for European Wall Street is tangible for London.
It is. I mean, London, for 30, 40 years has been trying to get closer to the New York model because it is a global fight for talent.
Yeah.
And when you then take it onto the continent, which Brexit kind of accelerated, it becomes even more difficult because the French don't understand or don't necessarily support the pay structure that you see on global Wall Street.
It's been a great show. We've got a great week here coming into 2 weeks to the election. At the top of the hour, Christine Lagarde of the European Central Bank with our Francine Lacroix as well. Paul, you didn't tell me that October in New York, forget about autumn and leaves and all that, it's Santa Barbara. I mean, it's like basically
fantastic.
We're having Santa Barbara weather.
Yeah, but what we could use, quite frankly, that was a little rain because it's been parched around here, and a lot of folks are seeing the effects of that. Yeah, but it's been the month of October has been fantastic, and it's down to Jersey Shore. We call it our summer, September and October.
If you're doing Santa Barbara weather, I mean, what do? When in doubt, you play Dishwalla. Let's do that.
He said